All right, guys, welcome to Everything Money. We have a special interview guest today. This one's interesting.
Yeah, for sure.
I don't remember what it was, but I saw Charlie Munger quotes on Instagram. So follow him, a guy named Chris. I sent it one day to Tim. Chris, I sent a quote to Tim, and Tim said, oh yeah, I follow this account. I love this account. So, of course, my skepticism, Chris, I think you'll understand my skepticism. So totally. When did the channel start? Tell us what caused it? Go ahead, Mo.
Yeah, when I first saw your page, I was like, this is different. Yeah. Who just puts up quotes of Charlie Munger?
Because everybody thinks Warren Buffett.
So, and I think to myself, there's 5 times a year to the general public that Charlie Munger and Warren Buffett are smart. And that's on when their 13F filing comes out and on Berkshire Hathaway big investing day. Every other time they're idiots. And I'm just like, wow, this guy sticks with this all year long. I've actually reposted some of your quotes before. I'm like, tell us how you get started.
And by the way, early on, I reached out to you and you ignored my message. But then all of a sudden, I messaged you and you said, Paul, this is really weird. I literally saw your channel for the first time just yesterday. I was like, oh, cool.
That's so funny.
Fast forward here to when the page started. I was in New York City during the pandemic through the whole thing. It was a ghost town. I had 2 dogs. So I was able to actually leave and get a little fresh air. There was a time when we were supposed to just hunker down. They were setting up the beds in Central Park. It was crazy times. But I just decided, I had this extra time and I wasn't going to. I wanted to do something with just kind of social media and things that I do for work, but also put something out there that I thought would be good that I wish someone had done for me.
Right.
I had discovered Charlie Munger when I was 18. I always think that'd be pretty great. And so I started the page just to see, would it have any traction? And pretty quickly, I do what they call growth for a living. So I could kind of tell pretty quickly, like, oh, this is resonating. I was taking screenshots of my notes app. And then I, started working on making a little template. And then it just evolved. And for me, beyond it just being nice to connect with people like yourselves, it's been really neat where I feel like I have Charlie Munger in my head all the time.
Yeah.
The lessons are really embedded there.
Right.
It's been great. So that's how this all started.
So 2 things. First off, people didn't see the recording beforehand. You know where Charlie Munger went to college, right?
Yes, I do.
Of course.
For a period of time.
Yeah, he didn't graduate from there. But so the reason I bring that up is Chris is originally from Detroit. We talked about it. His sisters went to Michigan, etc. But second thing, it's funny. I just wrote this in our community today. So we have our software and the community people. And every day I put a quote in. And I talked about James Clear and his quote about repetition. And something that we always tell people is you have to repeat these things over and over. So you talk about Charlie Munger being ingrained in your brain. This is a thing that I do over and over. It's just, I've heard Warren Buffett and Charlie Munger say the same things 8,000 times. Mm-hmm. And guess what? Anytime I can hear it say it again,
you'll listen to it.
I'll listen to it again because it's all about embedding in our brain the very simple things that will go a long way. And a lot of people will sit there and say, other way. If you listen to Charlie and Warren, it's funny. Yesterday I was reading something on Twitter about somebody talking about Lilu. Lilu is considered the China Warren Buffett and Charlie Munger. And he was talking about all of his processes. And I was like, yeah, I don't agree with 80% of these. It was way too granular. I don't think Munger and Buffett are as granular as people might think.
So that's a very interesting point. One thing I learned about Charlie Munger through Lilu, and I actually started doing this myself, was he said that Charlie Munger will collect all the mistakes of the past, the things he sees, human tragedies that are happening, in the present day as well, and he builds them out, checklists out, and so he can avoid, again, really taking, as you say, take a simple idea and take it seriously. Mm-hmm. So I think in that level, he's very. I know I'm speaking for Charlie Munger. He applies the checklist idea where he borrows that. He would say it's for aviation first.
Yeah.
These industries where if you get it wrong, everyone's dead.
Right. It's true.
So it's very effective. But I think to your point though, and maybe this is kind of on the same wavelength here, is a lot of people think they have a very formulaic approach to investing, or that they're very quantitative. When in reality, at least what I've uncovered and was a surprise to me is how much of their process is qualitative, and how absorbing a lot of different ideas from different disciplines, as well as just being students and obsessed with businesses and what makes a great business great. That is something where you can't make that up on a spreadsheet. Someone with a formula in the spreadsheet isn't going to be able to get the same result or have the gumption to take some of the bets they take.
Mm-hmm. Yeah, and like Joel Greenblatt had his magic formula, and I'm sure you've heard of that and been involved. And I believe in that. And funny thing is, that's basically a very simple formula. Buy very cheap companies with a high ROIC. How do you get cheap? Earnings yield, which is the inverse of PE. There's something to be said for that. However, I am becoming more of the, okay, what do I always joke, Chris, I always say I'm a pretty lazy guy. I don't want to have to dig. Follow up. And to me, if it's not obvious on a very, very simple, like you said about, Munger. So the inversion idea you were talking about earlier, just to give everybody an idea, Munger's belief is you go on the road, you make an investment, and your thought should be today, well, why wouldn't it not work? Why would it not work out? What do I not want to happen? Right. And what would cause that,
Worst
right?
Case scenario.
So to me, the ideas are very quantitative. I do first go on the quantitative side, and I think Buffett and Munger do too. But then they make their decisions based on the qualitative. The final yes is based on quality and based on the qualitative aspects.
Sorry, I didn't mean to jump in.
Oh, go for it.
We're both talkers, so we will be. This could go on for. This might be the longest podcast. I'd be honored. With something I've observed, and I was just reading something last night actually from the. It was one of the breakfasts that I think Michael Baumhausen hosted, and Todd Combs was there. And he was the guest lecturer. I wish I could remember the name of the breakfast.
And Todd Combs works at Berkshire, so if you want to.
Yeah. Yes. So no, totally. So he is one of the portfolio managers, and he's also the acting CEO of Geico, which is a Berkshire Hathaway company. And there were the questions that were coming up were, how do they look at companies? And he says that every day, and he's implying that it's Warren Buffett, but every day he's asked, are businesses, are their moats widening or are they narrowing? And I think that's a great example of something that's very qualitative.
Yes.
Because that's not. That's something you see after the fact, or you wouldn't be able to necessarily compute in the moment. But I think, definitely there's an emphasis on the quantitative. But what I've laughed at over the years, I've gone through and probably watched every Q&A session from the Berkshire meetings to get Charlie Munger quotes.
Yeah.
To keep things fresh, right? And some of the questions some of the people. This is years ago, so I don't think I'm talking bad about anybody. But it's just like, can you please tell me what if I took the inverse yield, and they would both kind of look at each other like, yeah, we don't do it like that.
So, and that's where so it's funny you mentioned that. When I was in college at Michigan, Michael Dell came and spoke. And I remember the thing that drove me nuts. Everybody was asking him questions, like they thought they were going to impress the guy. He was also going to be like, come be my co-CEO. Like, I'm like, guys. So it's funny, then an MBA at Michigan raised his hand and he said, Mr. Dell, I see you guys are getting into servers. And Dell immediately interrupted him. He goes, we're number one in servers. And that's all he did. He's like, we're number one in servers. And everybody laughed. But to me, it was this whole everybody thinks they're going to first off impress Warren and Charlie with some amazing question. And secondly, they don't think that. They literally don't think that. Like I always tell our friend Gary, we have a friend of ours named Gary who runs a fund. I think he's way too quantitative and way too anal in his process.
Yeah, he's extremely nitty gritty.
But it works for him.
It does.
So I wasn't trying to interrupt to say, but I always sit there and joke and say, everybody thinks that the great investors are just about the numbers. If that was the case, then everybody would be great investors. Put it in an Excel sheet and you're done.
Right.
It's so interesting you say that. There was an article I came across. I like going back and reading a lot of things that were happening before I was aware of all this stuff. And it was an article from 2010 about Michael Burry, I believe in Vanity Fair. It's called Betting on the Blind Side. And I found the PDF of it. And in this article, he talks about studying. He was going to school to be a doctor.
Mm-hmm. Yep.
He was in med school. And he came across, he was on these value investing forums, and he basically concluded that Warren Buffett, who he really admired and looked up to, doesn't use a formula. And that if it was that easy, if you could get rich using a formula,
anybody would do it.
School for it, and people would, and they'd pay an insane amount of money to go there. But ultimately, what he found from the greatest investors is while you take these ideas that are sound, that are kind of your foundational ideas, and in my case, it's the idea of compounding and compound interest. That's obviously kind of universal, but then you need to find the approach that works for you. Because at the end of the day, you have to live with the decisions, and you have to be comfortable, pulling the trigger and putting your own your hard-earned money up. So I definitely can echo that thought.
This is an interesting question that I want to hear the answer to. What drew you? Everybody wants to know. It's all Warren Buffett. What drew you to Charlie Munger over Warren Buffett? I mean, to me, I like Charlie Munger much more
love
than
Charlie.
I have a bronze bust of Charlie, life size, sitting in my office.
Have you watched our Monish Pabrai interview?
That is. Yes, I have, and I know he has one of Charlie as well.
Well, he's the one that does an auction that Mo bid on it, and he was. But anyways, go ahead.
I'm curious to know what drew you to Charlie versus and like sticking to Charlie instead of Warren. It seems like there's more easily accessible Warren content out there, and you got to dig for Charlie.
It's a great question. I've not actually thought that through. I think it was just what I was encountering was. I think when I hear Warren Buffett talk, and by the way, I've learned so much about investing.
Of course.
Through Warren Buffett, but it's usually about investing. I think initially with Charlie Munger, it was about, I have a really great interest in psychology. He was raving about Cialdini's book, which I had already read at that point. And so, things like that traditionally outside the investment world, even though it does fit in, it just resonated. And I think generally the attitude, maybe there's a little bit of the sense that he's so concise. I'm a wordy person.
Yeah.
And I love the way he talks. I find him entertaining in a way that I like. His attitude about the CMQ, the Q's for quietly, and I think I'm reading his biography by Janet Lowe. It's called Damn Right.
I have that on my desk.
That's a great. I really enjoyed that, and he purposely stayed off. He underreported his net worth to Forbes because he didn't want to be on the Forbes list. He didn't want the attention.
I love it.
There's just something about things like that I find to be super cool.
Yeah.
And then the last thing I'll say is, it's funny you asked me the question. Now it's coming to me. I'm like, now I know. I kind of always have done things my own unique way.
Mm-hmm.
And you encounter sometimes where your teachers, when you're younger, want you to do, hold your pencil like this, and things like that. And with Charlie Munger, it was like, oh, this is someone who is leaned into their kind of eccentric nature, and it's worked for them.
Yep.
And even just being so multidisciplinary and being curious about a lot of different things, it just echoes. I sense the same. I have the same sort of the same nature. And again, not to compare myself directly, but I think that's what's allowed me to sustain the interest.
Well, he says so over and over, I've never met a truly successful person who doesn't read ferociously. You know what I mean? I think, so I love Warren Buffett, but I have many, many criticisms of Warren Buffett. I don't have many on Charlie, except for his absolute disdain for like luxury. Like he literally, he's like, why would you ever have a watch that somebody wants to steal? I'm like, all right, Charlie. And of course, I'm a watch guy. So of course I get defensive about that. But I'm like sitting there going, but the thing I like about Charlie versus Warren is I do tell people Warren Buffett wants to make everyone happy. And he says in the book Snowball about Warren Buffett, they literally write in there, if Warren Buffett has to make a decision to pick between two people, he's going to pick the one that's more likely to be upset with them than the one he's literally going to go, well, that person's going to be a 7 out of 10 upset. That person will be a 3. I'm going to go with the 7 because I don't want to make them upset. Charlie's just like, fuck off.
Screw you.
And Monish said, Monish said, boy, Charlie curses like a sailor. I mean, he's F this, except for when around the grandkids. And around the grandkids, he's very, he's good and all that stuff. And I like that. Like, to me, it's like he's doing him. He's just being him, and it's like, I feel like there's a certain, I'm not going to say phony about Warren Buffett, because clearly you can't be phony and be a great value investor.
I think it's just who he is.
He just wants to make people happy.
That's it. Yeah.
I don't want to.
He's not trying to act or anything. It's just him.
Go ahead.
It's funny you bring that up. That book, I thought, The Snowball, by the way, fantastic book.
Awesome book.
Yeah, that's good.
Something that I did a podcast about this because I thought it was such an interesting kind of story. I think it was maybe around 1999 when there was a much fewer people in attendance at the Berkshire meeting. People were sort of thinking Buffett lost his touch.
Mm-hmm.
I heard a similar thing a couple of years back, right?
We hear it every year.
It was so interesting because I just read that book and I'm like, wow, this is the exact same thing happening. It was in that meeting they talked about it really bothered him, right? Like he was very upset by the fact that his shareholders felt like he was laying them down. And I think on one end, I agree, like we all would rather be the Munger way and just say, like the hell with you.
Right.
On the other end, I would say when I remember Robin Hood was doing this terrible spin job trying to defend themselves against this factual observations of Charlie and Warren,
Mm-hmm.
their business model and whatnot. And they said, oh, they're elites. They don't want the new generation of investors to make money or whatever they were saying. And it's so interesting because that's the opposite. Warren Buffett is so much of a people pleaser. He won't even tell you to buy Berkshire. He'll say, because he doesn't want to like lead anyone the wrong way where they could potentially be, put in a bad spot.
Right.
He genuinely cares about his shareholders as well, which I think, definitely espouses that or illustrates that example of just what great management is supposed to look like. But yes, there is a lot of insecurity in that as well.
And I respect that. That's why I always say with Buffett.
By the way, I just love that I'm talking about his insecurities. He's like the richest person.
I know.
Well, and that's the funny thing. But
He's like, who's an insecure guy? I mean, I'm more of a man than he is.
But you know what, though, Chris? I'm glad you're doing that because he's still a human. At the end of the day, he's still a human. In fact, our friend Gary, Buffett shut down all of his partnerships in the late 60s, right?
Yes.
So a lot of people thought, and he wrote like, oh, I have nothing good out there. Here's your money back. You know what Gary's theory is? Gary's theory is he just didn't want a bad track record for 2 or 3 years. He knew it was going to turn around. He just didn't want to have 2 or 3 years of just, no, he's like, and that's a very manipulative thing if you ask me. Like I heard that. I'm like, Gary, you really think so? He goes, yeah, I really do think so. And that's by the way, everyone, that's a pure speculative comment. It's not meant to say anything, but I remember thinking to myself, like, these are still humans. They just do something very, very well. I always joke and say, I'm very similar in the sense of like, I don't care what people think about me unless I care about you, right? So it's like he cares about his investors and shareholders. So if he's disappointing them,
he cares.
He cares.
Right.
But if you're some random on the street saying you don't get it, I'm sure Warren Buffett's just like, okay.
Thank you.
You know what I mean? It's just like, whatever. Like, I don't give enough. And go ahead.
You see that right now over the last couple of years with the pressure to go ESG.
Yeah.
He's been polite about it, but he's basically kind of, said these are people who inherited their Berkshire shares. I'm not going to, he's just not willing to bend to that because at the end of the day, he's looking out for what he believes to be the best interest of his true Berkshire people. I think that's a great point. Something that you remind me of is, and I think people get his public persona sometimes mixed up and think he's nothing but just like, everyone's grandpa. I mean, he's a killer. There's no doubt about it. I think he's built this reputation that's allowed him to, do these handshake deals and get these favorable terms and just, be this great teacher. And I believe that part is totally genuine. But I think to get to the point where he is and to stay there, there's a killer inside. And I know that from the Snowball and a few other books I've read, shouldn't be a surprise, but he's extremely competitive. And I think I never thought about that about close to the partnership, but that would kind of align with my understanding of, sort of the true nature of his competitive spirit. Because again, if you could, look, I watch a lot of basketball. There's, you want to go for those triple doubles. You might grab a couple extra rebounds here. It's part of the game, and the track records count, and people remember those. And so he was younger back then too, so I wouldn't be surprised.
Well, what's interesting to me is I didn't realize he recently, in the last 10 years, changed the comparison from book value per share growth to comparing to the S&P 500. Comparing to the Berkshire stock. So he used to, if you look at his, annual reports going to like 2010 or something, I don't remember the exact date, he'll always put book value per share, growth of book value per share in Berkshire. For some reason, he switched to now I'm doing Berkshire stock. And I don't know why he did that.
I didn't read the report, but I should just go in and read the report. I'm sure he explained it. He's a very transparent person when it comes to those. But then
reports. We're just talking here about the late 60s when he said, I have nothing to buy out there. Here's your money. Here's your money back.
True.
And then all of a sudden he reopens when things get normal again.
I would think though that if you're going to leave it that way for 40 some years and then you change it, he would give a reason.
Yeah, I'm sure he did. And you're right. I mean, just like, it's funny. This is not meant to be a Warren bash session, but I do think that Charlie's a lot more, I don't want to say genuine, but kind of genuine. Like, when he's telling you to F off, he really means F off. When Warren Buffett, Warren Buffett's very big in the Dale Carnegie world of how to win friends and influence people. Remember David Sokol and that whole deal involved a Cleveland company, Lubrizol. He went from David Sokol's a god to he's out of my life, he's fired, he's gone, it's blah, blah, blah. I mean, he went from, and I always tell people, I'm like, listen, if Warren Buffett came today and said publicly, I think Paul Gabriel's a genius, I would take it with a grain of salt. Be like, okay, sounds good, right? Because I've seen him talk about LeBron saying, if LeBron was an IPO, I'd buy into LeBron. I'm like, no, you wouldn't. Like, no, you wouldn't. Like, it'd probably be overhyped, and you don't believe in IPO. Stop saying that. So with Munger, though, I think Munger would be like, this is shit. I'm not doing this. Like, F you guys. You know what I mean? And and he's funny that way. But, everybody has their hypocrisies and contradictions, as do I. And I think with Buffett and Munger.
It's why they make such a good team, I think.
Yes.
Yeah, there's a very good yin-yang there.
No, I think, going back to Charlie for a quick second, I think there's something too is, I like how outspoken he is about even his investment approach. Warren will kind of take an approach where it's, sort of for everybody where Charlie doesn't mind saying what he thinks is stupid.
Bitcoin.
So like his willingness, totally. And I also like his willingness to just call out, not just of course, the Bitcoin stuff, which we could talk about all day. I'd love to definitely talk about that. But also just some of the, kind of, I'll call it low grade, kind of grifty folks that are in sort of the larger world of the investment business. And I think it's, he can speak out and be outspoken and not worry about the blowback.
Yeah.
I think he does a real service to people because I'll tell you something I noticed during the pandemic, from the start to the end, a lot more people were up on things like payment for order flow. And Charlie Munger, to my knowledge, and, I'm sure I have a bias here, but I learned about that concept through him calling out Robinhood at the Daily Journal meeting during the pandemic, where he said, it's not commission free.
Mm-hmm.
That's something where I'm still learning every single day. So I ended up going down that rabbit hole, made an episode of my podcast about that, and learned everything I could about it. But that was because Charlie Munger, kind of raised the awareness there, and I think a lot of people perked up because of that.
Yeah, that's why I always feel like, so if you watch a lot of our videos, it's kind of, we have a joke. Mo gets recognized in public a lot. I do not. And the joke is a lot of times, like, I'm hoping the real reason is everybody's just scared to come talk to me because I'm so quick to say, Cathie Wood's an idiot. So my friends have this.
Oh,
go ahead.
By the way, that's, I've watched, I'm up to speed on you guys' show. I did not know you felt those feelings about Cathie Wood because I have been, again, smaller platform, but ridiculously outspoken about her.
Oh, it's terrible.
She is literally
I literally think she has no idea what she's doing.
No, she's insane. Innovation so powerful.
You're a crazy person.
We're very outspoken about Jim Cramer. I remember one of the biggest insults I ever got was I said I wanted a company, and some guy goes, do you follow Jim Cramer? Because he agrees. I was like, that's such an insult. I'm done here. You know what I mean? It's like,
I'll tell you, how bad Cathie is when Jim Cramer said she's the kiss of death.
That's when you should have gone all in on Cathie.
Yeah, exactly. I would have been buying Cathie at that point.
Yeah, she's, I'm glad. I have no problem calling people out. Now, do I need to do it more eloquently? Probably. But, like a guy like Munger sits there and goes, I'm much more like, like I said, my friends, we have a group of friends. And the joke always is, oh, Paul hates everyone. It's like, yeah, I do, because I truly believe that 99% of financial people are out for themselves, which is okay, but don't tell me otherwise. Don't tell me you're looking out for me when really at the end of the day, you have career risk. And at the end of the day, you're not going to tell your family you can't bring home the bacon because you want to, you're still going to go sell what you need to sell to get what you need to get so you can go home and live the life you want to live, right?
Totally. I think that frustrates me or what, as being somebody who I consider myself, kind of an outsider that suddenly, or not suddenly, but, through this kind of journey here is now a lot more, I guess, inside. But, my perspective was, it blows my mind that, and I'm not knocking CNBC because they do have some good programming, but people like Cathie Wood get to go and do basically just free commercials.
Yeah.
That's all. They're just advertising.
What bothers me is totally, when I was a little bit younger, not that long ago, I remember thinking thematic ETFs made sense. And I remember I was working, our initial office
was like mixed in with this NYU Polytech incubator it was focused on AI and machine learning. And so I was like, there was, I think it was
BOTZ is the name of the thematic ETF. And I was like, oh yeah, I know the space. I'm around a lot of AI engineers and all this stuff. And, within probably 8 months of buying it, I smartened up. But, Cathie Wood comes on TV, and it's funny going back to Warren Buffett, what he talked about in Sun Valley back in the 90s. if you look at the history of industries that are, revolutionizing the world, and that's Cathie Wood's whole shtick, it doesn't work to buy a basket of them. There's only going to be one or two that actually deliver rewards to investors. Like it's how it works.
Yep.
But meanwhile, Cathie Wood, who's supposed to be this just incredible, she's more like an economist now. She comes on, Cathie, what do you think's going on in the world? We believe. She's nuts. And she reminds me of she's like the soccer mom where you're like, Mom, it's like the Google Maps is telling you, like, please proceed straight. And she's like, there's a clip, and she's like, just let Jesus take the wheel. I always say, my mom, and I'm going to go on a quick Cathie Wood tirade.
Please do.
Great person. My mom, just so no one thinks I'm making fun of anyone's spirituality, my mom is like a Bible study. I joke with my mom, I'll call her up and she's like, I'm teaching Bible study today. And I'm like, Mom, you gonna switch to a new book? I told my mom about Cathie Wood. I'm like, Mom, this woman who I encountered in this investing world, she is, I found this speech she gave in 2016, and she's talking about, she said, Jesus, the Holy Spirit hit her.
Oh God!
Wait, what?
It's a direct quote with a business idea.
Oh.
The Holy Spirit hit me. She goes like this. She goes, with a business idea, without any sense of how ridiculous that seems. And my mom, who's not hardcore, but she was just very offended by the idea that this person is grifting basically and using her. She talks about her research, but a lot of the research is her going
Well, I will say,
no, 100% it is.
That idea hasn't worked out too well.
No, it's crazy because it's a lot of people who. The thing that bothers me, guys, is it's so easy. She's so good at sales. She's incredibly persuasive.
Yeah.
I almost like her, right? She's so good at what she does that when I see people putting their hard-earned, their retirement with her,
right,
and knowing that it's violating a lot of these first principles, that's what makes me, upset. It shouldn't make me upset. I wish I didn't get upset about it, but that's the thing where there's a few if someone on these shows would say, "Hey, Cathie, what you're talking about, actually that doesn't add up," and it happened kind of recently. She was on Yahoo, and they were like, "Cathie, you said 5-year timeline, and you're actually down 10% looking back 5 years."
Yeah,
and it's just it's kind of gross.
Yeah, so I think I'm in the same boat there. I think that's my biggest issue, Chris, is I get upset. But the reason I get upset is a little bit different. I get upset because people give their hard-earned money. They look at us. I remember if you look at our videos in February of 2021 about Cathie Wood, literally the comments were, "You really think you have a better process than her? She has a hedge fund, you don't." I'm like, well, she doesn't have a hedge fund. She has an ETF, but I won't get into that. And then I look at that saying the same reason why people's justification for why she was smart is here, and she made fun of value. Remember she said to Michael Burry, he doesn't understand disruption.
Yeah. She said that to many people. They don't understand disruption.
And now
they don't understand.
And now it's down 80-some%. And the same logic they said to dictate why up was proof that she was right. So here's my theory. I don't know if you heard me say this. I've said recently that I think Cathie Wood will eventually be forced into retirement, and she'll make some claim like, I've done everything I need to do. I left my legacy on the world. I'm done. But it's really going to be her saying, I'm sick of all the losses, and people are because if you look at her net inflows and outflows, there's still net inflows in 2022. That tells me
still going.
It still has a long way to go.
She has closed a couple of ETFs though.
But not the main one.
The
main one still has net inflows.
Arc Innovation.
No, when I first started kind of dabbling with YouTube, what inspired me, one thing was her transparency ETF. It was based on a book that had 3 Amazon reviews, and she's like, I think his name is Paul Pagnato, if I want to say, and I went to the website, and you pay $10,000. If you pay $10,000, you get to be your company is certified transparent.
Oh, jeez.
I
think I might do this later today.
It was nuts, and of course I bought it. I mean, my company's now transparent.
Yeah.
And she was they got about 12 million in inflows and they shut it down. But it was just ridiculous. I mean, and then the thing with the venture, they're democratizing venture capital.
Yeah.
She didn't even go to the rounds where she sent her lieutenant out, who was having a panic attack on TV, answer questions about it. So it's such a grift. But it's it's wild. It's wild.
I wish people would better understand that these people are out there for sales purposes.
Well, that's the funny part. Like that's the funny
Jim
part.
Cramer,
Nobody gets
Stuart
that.
Varney.
Well,
like,
not only
how do you
them,
not see that?
not only them, financial planners. And I get it. Like, you know, to really. So the guy in Boston I'm talking about, Gary, people are floored. I remember once a friend of mine reached out to me and said, "Hey, do you know anybody who manages money that's good?" And I said to him, this guy, he's like, "Wow, you're endorsing him?" Like I said, "Yeah." He's like, "Well, he's got it." Not because if I'm good, he's better. I was just, because I criticize everyone, like even hedge funds. I'm like, these guys are idiots. I'm like, come on, like give me a break. You know, I sit there now whenever a friend says to me, "Hey, I want you to hear an investment," I say, "Listen, you got to remember, if you have me in front of these people, I'm going to ask them very uncomfortable questions, like very uncomfortable, because it gets uncomfortable around me." And I'm not saying it as a way of bragging. I'm just saying it as like, I can sniff out BS very quickly when it comes to numbers. So from the quantitative perspective, we've been talking about this Madoff thing recently.
Have you watched the series?
I'm not going to lie. Yeah, have you watched the Netflix series?
I have.
Yeah, okay.
And I watched many of the documentaries they put out. There weren't a lot of them, but I
They're great.
watched as much. They're fantastic.
Yeah.
But here's the deal. I'm not going to lie when I say, if the SEC had investigated him 4 times, I knew this, I would have given him a pass. I would have just been like, hey, the SEC, and that's me going, you know, it's a lot of funny. I would hear people say like, "Oh no, it's so obvious." I'm like, no, it wasn't so obvious. And when somebody's promising something so great, so I think to myself, how would I have fallen for this? If it wasn't for the SEC approving him, I would have definitely not invested. Not called him a Ponzi scheme, but I would have said, something's not right here. But the SEC approved it, like, being okay with him 4 times. I said, listen, it's the SEC, because I would have known they could just verify his funds like that. So if they approved him, it means they did that. And it ends up being that the reason the SEC approved him was because they didn't verify his funds all 4 times.
Just gave him a pass.
And that's why I tell my brother all the time, my brother's a lawyer, "Mikey, the government should have been on the hook for the entire thing." He's like, well, but my whole point about this is, we look at Cathie Wood. Do I think she's like Bernie Madoff? No, I don't think she's malicious. I think she genuinely believes the bullshit she's spewing out.
I think she's an idiot. I think that's what it is.
Instead of cause bias, she definitely believes her own BS.
Yeah, and guess I believe my own BS. The difference is, I don't know if you've watched our channel and the Palantir videos. The difference is, you know, we had a little quote unquote YouTube beef with a guy, another Michigan guy who was pro on Palantir at $45. And I said, hey, I'm interested at 5. And now Palantir's at 6 or 7, and I'm getting very interested on Palantir.
Yeah, not to cut you off. I want
No, go.
Because we're very much. Well, I just find anytime there's sort of like these communities forming around stocks, like that right away, I'm like, okay,
Red flag.
Red flag. Yes.
And there's this weird thing, and I found myself drifting into this. I sound like Charlie Munger now. I was like drifting into something, and I realized that I quickly corrected it with Alibaba. And I own Alibaba. I definitely, that's a whole other conversation. But I was finding my content. I was getting more traction with Alibaba content. And they're just kind of hamming it up a little bit. I had these orange sunglasses, walking around New York, being like telling people I was the #1 Alibaba shareholder, just goofing. And but before you know it, you're like, I suddenly realized, I'm like, wow, I have like a really large individual position, more so than what I would typically want to do.
Yeah.
And I don't need to take this risk. And I also underestimated my ability to. I'd gotten the psychology down at this point, and I can say that confidently because I've not sold a single thing through all this turmoil, and that would have been different 5 years ago.
Yep.
But I underestimated my ability to cope with the uncertainty of the CCP, even though I thought that I really, I read a bunch of books, and I really thought I was like, okay, I got this. And then they're like, I'm seeing people get dragged off and thrown in vans. I don't know what's going to happen here. But anyway, to go off that same note, I pulled myself out of that thinking. But there is like a cult following for these certain names. Palantir is one of them. And there's like a guy that has an entire channel dedicated just to Palantir updates. And I just don't get what the hype. What's
the channel you're talking about? You're talking about Tom?
No. No, I can't. He works with the guy. I've talked to him before. I can't think of his name. He's a younger guy.
No, and you're right, by the way. That's the thing I always tell people. Howard Marks once made a very brilliant statement. I listened to a podcast. He said, listen, I didn't have to understand CDOs to understand there was a bubble in real estate or to avoid it. Like, I wasn't some genius. I just saw the way the world was reacting to real estate and CDOs and MBS and all that stuff, mortgage-backed securities. And I said, something's not right here. And that's what I do.
Sure.
The thing I learned and you talk about the psychology. Same thing. We've been buying as things went down. Certain names. Now, the funny thing is, everything's still, there's a lot of great names that are still too far away for us, like Microsoft, like Apple even. Like, we don't agree with Warren Buffett's view on Apple right now, but either way. But I look at the stuff and I say, okay, where is my bias from me backing this company? Because that is a concern of mine. I went on, go on YouTube. I talk about a company. Do I have a bias here? Like Sleep Number? I was in Sleep Number and I got out recently. And I said, yeah, I had a meeting with my friend Gary and said, Gary, here's what I think about Sleep Number. And he made a few valid points. I said, Gary's right. I got to wait on this one. I believe Sleep Number you can make money under this price, but I think it's going to go a lot further down before it goes up. And maybe that's timing. Maybe it is. I don't know, but it made sense. And so you sit there and have to sit there and even look at yourself individually and say, where are my biases in this situation? And how is it affecting my decision making?
And especially in the position you're in and on a different, I'd say, on a smaller level on my side, where when we do talk about names, this is another Charlie Munger thing where the more you talk it out, the more you kind of drill it in.
Right.
And that, if you're not conscious of that, which I think we are, but it was a wake-up call with Alibaba, because I found myself, like I said, leaning into making more content about what the algorithm was saying. Hey, like, they like it when you do this. Mm-hmm. And before I know it, I'm like, wow, I don't have an individual position that's this large. And it was alarming. I think it's very easy to have that happen.
Mm-hmm.
But yeah, there's a whole bunch of I heard, I don't know if you were made content about the kind of this whole SPAC thing.
We made a lot of content on it.
Yeah, I need to catch up on it, because I know I'm gonna like your take on it. But I do some Instagram lives, and inevitably there's always some person that's like, you're not Charlie Munger.
Of course. Hey, what do you reply to them?
Yeah.
Do you reply like, oh, really?
Yeah, no, at this point I just laugh. There's always somebody's gonna say it. There's a couple times I've talked to guys who were like probably college age, and they got totally swept up by Chamath and felt like he was like their advocate.
Yep.
And I mean, I read that from a mile away. Anytime somebody like takes the bass out of their voice when they talk, I just want to help. Like, he's got that same, like, it's almost like a Sam Bankman thing.
Oh God.
Like, well, I just want to help people. There's just something disingenuous. Like, that behind closed doors, someone like brings out a coffee with 2 sugars, not 3. They're like, I won't even imitate it, but it's like,
let's go after them. Yep.
But yeah, totally. You're like, you'll never work in the city again. But anyway, he just strikes me as someone who's just not genuine. And when I learned about how SPACs work and how the promoter gets paid and the incentives in that situation, then you look at the 10Ks, and I always try to encourage my audience, I'm trying to normalize reading 10Ks, right?
Yep.
And because I think there's value in those, even if you're not trying to invest in the company. And you just look through. It's like, how could you justify buying this at all? It's these companies are like Mr. Potato Head companies. I don't know. You guys probably have a lot more experience on this than I do, but that was my kind of fresh take as sort of an outsider.
No, it's pretty much the take that we take. We might go a little bit more in depth when explaining in a video, but that's pretty much it. Yeah,
but I talked about my laziness earlier, Chris. One of my things is when I'm investing in a smaller company, I definitely get a lot more detailed than, like, if you told me right now, Paul, you can have Google for $60 a share. I am not even reading an article about Google at $60 a share. I'm just like, I'll take it. Just give it to me. Like, that's, and that's
Sleep Number, though. We did more digging.
Sleep Number, we did more digging. And look, all it took was, Gary saying a few statements, and I'm like, holy shit, he's right. Mm-hmm. And, and that's part of the learning process. So, by the way, you're in New York City. You know what we need to do? I've talked about this a billion times. We need to come to New York City. And we need to do the whole go on the street and ask random people just very basic questions for our channel and say, hey, one of the things that bothers me the most about. So a few years ago, I talked to my lawyers. I wanted to put a fake investment on. And I wanted to sit there and see how many people I could dupe into it just by making up bullshit and saying, and my lawyer's like, yeah, 100% you cannot do that. That is absolutely illegal. Don't even think about it. I was like, oh, okay, scratch that. But my whole idea was, people don't ask questions. I have the number of people who say to me, Paul, I just talked to this investment guy. You got to talk about this real. And I ask very basic questions, and all of a sudden, the story goes a different way. So when it comes to asking everyday people questions, to me, it's not about saying you're a fool. It's about saying you don't know enough. Stick to ETFs. You're going to do fabulous in life. Something as simple, Chris says, hey, let me ask you a question. If you saved $1,000 a year for 30 years and you invested at 10%, how much money do you think you'd have? Because this is what I think financial planners get away with. They can show you, hey, in 30 years, I quadrupled your money. And a person like you and I goes, that's shit. Like, you should do way better than tripling your money, than quadrupling your money in 30 years if you invest in just a long-term ETF. Sure. So these are the things that I want to ask people just to show them, like, listen, we're all dumb. It's okay. Just understand where you're dumb and understand where you're smart and focus on where you're smart. And I think it's Charlie Munger who said this. Was it Charlie Munger or James Clear?
Said yesterday in an Instagram post.
Be smart enough in the things you suck at so it doesn't hurt you. Yeah. But once you get to that level, stop worrying about it. Go right to focusing on your strengths. And I really believe it's the thing called Strength Finder. Just understand, like, I think for people to be really good at investing, they need to understand a few things. One, the emotion of it. That's it. If you see everybody hyping something, just avoid it. Just avoid it. That's it. You know, I always tell people, it's on our channel, I was offered Google in the IPO back in 2004. And I said no, because it didn't make sense. But I'd buy Google all day long at $60 today, even though the IPO price was $3. Essentially, the same thing would be $3. And people would argue like, well, you said no at $3. I'm like, yeah, because at $3, it didn't make sense. But at 60, it makes a lot of sense. And that's a hard thing for people to understand.
And that's a good example too, where it's very easy to look at something and beat yourself up over it. But let's say there would have been, and how you mentioned Howard Marks. One of my favorite lessons from him is about both sides of the risk coin, where the greater the risk, the greater reward. But there's also the greater the range of positive outcomes, but also the greater the range of negative outcomes. So there's instances where like we can think we're doing something, and I think Tesla's a good example. I know a lot of YouTubers, a lot of people I know in my personal life, thought they're Warren Buffett because they bought Tesla. And again, good for them. I always say, like, I want everyone to make money. I'm not a hater.
Right. Oh, I'm a hater. I want a lot of people. I want a lot of idiots to lose money. No, 100%. I want all these YouTube guys to just go bankrupt. 100%. Full disclosure.
Well, you know what they're going to get. And I've been making videos calling, and I've really enjoyed kind of like taking out my frustration at them in the comedic YouTube format. It's been and it's nice because people will find it. They're like, thank you. Finally, someone said this. Because they're awful. Mm-hmm. And the one thing I'll say was a lot of these guys with Tesla, they thought they were geniuses because they bought Tesla. And I heard Charlie say this about Bitcoin back in, it was actually another University of Michigan talk, the Ross School of Business. And he said the worst thing that could happen with Bitcoin is it works out for you.
Yeah, exactly.
Then you'll get to the next thing.
That's exactly.
You think you.
Yep.
And you get killed.
Buying any of these IPO companies I look at Peloton, for example. We had friends that made money on Peloton, Penn Gaming, and I'm like, this is the worst thing that could possibly happen to you.
Yeah, I always say
make a killing on this, you exit your position, and you're like, I can do this every time.
And you know what's one of the best things that ever happened to me?
Yep.
One of the best things that ever happened to me is I bought Microsoft in 2011 and 12, like high teens, and I sold it at 60. And the reason that was one of the best things that happened to me was it went to 350, which I don't think it's worth 350, but I do think it's worth all day long, just from with a margin of safety, 160 to 180. So it's probably worth low twos, mid twos. And I look at that going, and that was a big lesson for me going, Paul, you sold too quickly. And one of the things I see a lot of great value investors who believe in ROIC saying now is, it's really bad to sell too quickly. Mm-hmm. And that was a big learning lesson for me.
Yeah.
Let the runway happen.
That's been a big one for me. And I went down, there was a period of time where I was obsessed with all the behavioral economics and cognitive biases, particularly like related to finance. And I believe that's the disposition effect, where our tendency is we sell our winners too soon and we hold our losers too long.
Yeah.
And that to me was not only eye-opening, but it was something I could apply. And it just, it's our natural tendency, right? Like we want to feel smart and lock in some gains. And I think that's another Charlie Munger thing that was so counterintuitive, but it's so smart. The mathematical advantages of doing nothing. And there's this great book, you all probably read it. It's the Warren Buffett Portfolio by Robert Hagstrom.
I've never read it.
I've never read that either.
It's the he did one about the Warren Buffett way, and this was actually Charlie Munger didn't like that one. And then the second one, Charlie said this thing. He's like, the first book I felt didn't contribute much to human knowledge. Like that was and then he said, but the second one, he sent him the manuscript and he liked it a lot. And sure enough, it's a really solid book, and it talks about, among other things, when you can delay realizing your gains, you're able to compound more forcefully.
Yep.
And that goes back to, obviously you have to buy the right companies to be able to do that, and be something where there's some predictability to it, and you can roll for a long time, and that's not easy. But when those ideas are so sound, when you get down to the fundamentals, that I question people that are like trying to buy 100. This one of these YouTuber guys, he did his like stock. Here's my best stock picks of the year. This guy's I don't even want to say his name because he's such a degenerate. So my portfolio, I have about 100 stocks, and I'm like full stop. Why would you ever have 100 stocks? That makes 0 sense. And anyway, it's funny because these guys like try to appeal to children. Like if you look at their most popular videos, it's like how to options trade for teenagers. They're very much speaking to people who are going to get beat up.
Children and novice.
I would have been one of those people.
Oh yeah.
10 years ago, I would have totally been like, oh, like NFTs, yeah. I'd like to say that I would have been above it, but everyone's lured in at some point to quick money, for the allure of quick money, easy money.
Especially when you're young and you see your friends making a ton of money by doing nothing.
Yeah.
And that's why I always tell people it shouldn't be this easy.
Yeah.
Yeah, and it's like the world doesn't work like this, and if it does, it's an anomaly, right? It's like a glitch.
Exactly.
It's not the norm.
Yeah, so it's I actually think it's more dangerous to sell your losers too quickly than it is to hold on to to sell your winners too quickly than hold on. It's funny. I get stuck on the whole sell your losers thing. And the reason being is this: the only time your money is a loser is if something materially changed in the company that you didn't understand. You go, oh shoot, I was wrong here.
Right.
Like Sleep Number.
I think you're totally right about that, because what happens, I believe, is it's when someone doesn't really know what they bought in the first place.
Right.
And they're waiting for it to get back to the price they bought it.
Correct.
And so it's like the time that they could have done something more productive with their capital, they're waiting for this thing that might not even happen.
Right.
Because they're really just hoping it gets to that price, because that's how they bought it, based on that price in their head, not about anything. They're not thinking about the management. I mean, what I've learned in the last few years is like, it's blown my mind how few, even the professionals, are really considerate of those things that Warren Buffett and Charlie Munger talk about. Like the level that you all are. Like, it's not, even though that's clearly what you're supposed to do, people still kind of make these, ooh, I like this right now, let me buy this.
Yeah.
Anyway.
Yeah, the management thing has always been something that I've struggled with, because
with large companies, I've really started, I say it all the time on the show, I just look at ROIC.
I mean, that's a big factor for me. That's just, but the thing I look at with management, the biggest thing is share buybacks.
Yeah, that too.
If they're buying a lot of shares back when the stock is through the roof and overvalued, I just go, mother F. But
the hard part becomes when they consistently buy them back every single year for 20 years, and you look at that and go, well, it doesn't really help me.
Those are the hard things.
That doesn't help me.
Those are the hard things when we look at going, I think it's part of Warren Buffett's spin. I really do believe that. I believe it's this whole, let me be liked.
Really?
Yes, and the reason being is, he also says, we want to buy businesses that are so good that even an idiot will run it, because someday an idiot will run it. And I look at that and hear that, and I go, you say management's so important, but then you say, I want the business to be so good that even bad management won't ruin it. It's like, so which one is it? Is it good management, or is it a great business? And I'm sure it's a combination of both. But I personally, this is my personal opinion, which I'll probably change in the next 10 years. I personally think they speak about the good management more as like, let's give some reinforcement, because they'll never come out and say, hey, listen, we bought Occidental. We think management's fucking stupid, but the business is awesome. No, they're trying to sit there and say, we love management so much, we're buying the stock. I personally believe that
you can love management and buy a shitty business.
That felt like a spin job to me as well, when it was like, I was listening to the earnings call and I thought she's doing exactly what I would do. I was like, that's the most surface level thing I've ever heard.
It's so surface level. It's so like to, yeah.
Where I do see, and again, my opinion is just an opinion. I am very, very much intellectually humble about all this stuff. But with management, what I've appreciated, let's take a really popular example, but Tim Cook at Apple.
Yeah.
I went down the Tim Cook rabbit hole to try and kind of live out this idea of like, I want to really understand management. That was just an easy example to do. And when I look at some of the things that he brought to the table and the way he runs things, not to say that Apple wouldn't be successful without him, but and again, I could be biased here, but it seemed to me that his leadership has been something, even he's done things that I don't know if Steve Jobs would have been able to do. And that's not necessarily fair. Steve Jobs wasn't here to prove that. But his legacy is, it's cemented. So I don't think I'm disparaging him. But there is a certain, I don't know, to run a company like that and do it so well, to me is very impressive. And maybe that's why I put some stock in management. The one thing I have done before though, and I did a video about this, and it's kind of petty. It's petty to some, but if I see any sort of like budgery, and this might not even seem like it's that deep in the weeds, but I was reading SoFi's 10K, and SoFi, another one of these stocks, like I think Chamath promoted that one as well. Is that right? Is that one?
Short everything he touches. No, I'm just kidding.
Yeah, no, 100% pretty much, because he's going to sell it as soon as he's done talking about it. He's like Virgin Galactic. It's the greatest company. It's like I just sold everything. but he's such a good guy. He's such a good guy. But then there was where was I with that? My train of thought.
SoFi. Yeah.
So SoFi had this. They had this one little number. So I do customer acquisition. That's a big part of what I've been doing my career. And
marketing.
Very much like when I see if someone on my team was like, "Hey, here's our CAC is best in class customer acquisition cost." I'm like, "Come again? You can't turn that into somebody." And the thesis he posted on Twitter was like best in class CAC. So that kind of perked my antennas. Then when you look at SoFi's, their investor decks, they have an asterisk next to members. They always, the first slide, and I always say whatever you show first is what you're really trying to like get people excited about. They're like, our membership is growing like this. Well, they include anyone as a member, even if you're not actually transacting. So if I sign up for their free credit score service, which I did just to test this out, I am now a member of SoFi. And get the crazy part is at no point, unless I do something like egregious, like unless I'm suddenly a huge public figure and I get canceled, I am always a member. So there's no churn.
Oh, wow.
They never pick out members. So that kind of stuff to me is like, And if I have that feeling at all, I'm just like
avoid.
And that's and that's brilliant, by the way. But I think to me, it's more like in security analysis. The great thing about investing in bonds is the second you see something garbage, you just move on. Because it's like, listen, I have no upside here. And I agree with you on that. If I see something like, hey, you guys are misreporting this, I'm out. But I don't think, so here's that comment to Tim Cook. So if Tim Cook dies tomorrow, are you selling Apple stock?
I'm not selling it, but this could be totally emotion. I'm concerned because what he brings to the table operationally.
Okay.
I feel like is tough to replace.
Fair enough. So my comment to Warren Buffett would be, Warren, you're talking about owning a business forever. Do you think Tim Cook will be around forever?
No, I definitely not.
And then Warren Buffett would say, well, of course not. He's going to die. And my comment is, well, then do you really care about Tim Cook? Not saying it to you, Chris. I'm saying it to Warren Buffett.
Care about the business.
To me, I look at it going, well, then I always tell people, when somebody brags to me about their business, oh, Paul, I got 30, I'm the most important part of my business. I go, well, then you don't have a business. I'm sorry. Because if you can't sell a process, if you can't sell a mindset, if you can't sell a corporate culture, then your business doesn't matter to me. If you're going to get hit by a bus tomorrow, well, then theoretically, what you believe, and to me, it's just an ego thing. But this is why I talk about the man. And again, Chris, I'm not criticizing what you said. I agree with you 100%. I agree with you 100% in the sense. Go ahead.
I'm liking what you're saying too. I'm learning from that. Learning from what you're saying because, I've seen that mindset before as well. And you're right. It's not, that doesn't scale. It's not something you can pass on. And I think what Apple, if I remember this right, I believe before Steve Jobs passed away, they have like an Apple, like almost like culture school where they've tried to, keep and maintain sort of like what Apple was in this moment of time. And I know that's not something that probably works perfectly, but I would feel better if there was a kind of like with Berkshire, like the fact that there's been so much planning that's gone into the succession planning, I should say. That I think, and again, this could all be emotion, but it makes me feel better about like, it's almost like that association bias, like someone's given him like, we put his hand on his shoulder and said, this is the guy now, you'll be fine.
Well, no,
I think that Apple's doing that, just not as publicly. Because there are people that like that Jaws guy, and they're very, very closely aligned with Tim Cook.
And I do believe that, like, so for example, if you gave me 4 teenagers today and said, go work with Paul for the next 10 years, like Warren Buffett always says, you either get value investing or you don't. I disagree. I think there are people who do just get value investing and people who don't. But I also think it's the environmental issue. If you're around me all the time, I talk about cash flow, I talk about these, like our one of the guys who's working the show, Seth, he wasn't a value investor when he came, but then after a time, he was just like, I remember hearing things him saying like, yep, he's getting it. Yep, he's understanding. My brother was just a teenager when I started the business and started doing investing. And I guess he was younger than that, but when I hear him now, I hear him, the thing he says, and he goes, yeah, these people are idiots. He never read a book about Warren Buffett. He's never read an annual report, but because of being around, I believe with Warren Buffett, you are 100% correct. I believe they're doing the right things at Berkshire to say, we have like-minded people, and our goal was to find people who are okay making $10 or $20 million a year and not making $1 billion a year with their own hedge fund. And I think that's very valuable.
It's very true.
And that's why, but you know what the funny part is? 10 years ago, Paul would have said, no, give me the $1 billion. Now, if you said to me, Paul, you can have a hedge fund where you make $1 billion a year, or work for Berkshire and make 20 or 30 million a year, and it goes up 6, 7, 8% a year. I'm like, I'd just rather work for Berkshire. And people would say, no way. Yeah. Because 10 years ago, Paul would have said, no way you would. Yeah, 100%, because I like that corporate culture a lot more than the hedge fund industry and the hedge fund corporate culture.
What do you think changed about yourself to kind of, or that what brought along that evolution?
Well, you know, great question. Because it's funny, you said something earlier, Chris, and I said, I think somebody's been thinking the same way I've been thinking. It's a lot of things, but over time, so this example I give in a lot of interviews, 15 years ago, the thought of not owning a 50,000 square foot home was devastating to me. The thought of not someday being the richest man in the world was literally devastating. Like, why would I even work if I don't have the potential of being that? Then realizing that money did nothing. As more and more money came along, I wasn't happier. Like literally not even 1 iota happier. And I was like, okay. And then it started to become more quality of life. It started becoming more like, okay, what am I doing and why am I doing it? You know, like you said, what's your goal? Your goal is to be the best, like provide a lot of value to my clients, right? So over time, I just started to realize like more is not better. More is actually worse. You know, I was just sitting there thinking to myself today, we were talking at, my sister-in-law's having health issues and we were at the hospital and we were talking about something and somebody said something about like, oh, a kid, one of my future nieces-in-law, her son was there. And they're like, man, how great is it being a 5-year-old? You have no stress in the world. I said, you couldn't give me $1 billion to go back to age 5. Now, my fiance says, oh, PG, I'm so sad for you to say that. I'm like, yeah, I get that, but it's not for any reason other than I just think every year is better than the last. I don't want to go forward 10 years. I don't want to go backwards 10 years. I just started to change more about like, let me just make today as fun, as great as possible. Now, don't get me wrong. I have a long way to go. I still have a lot of my self-worth in my net worth, but not in the sense of, for what changed for me was just realizing more and more that life is to be lived and there is such a thing as enough. And that it doesn't mean I just stop caring. I still want to make money and I still want to do well, but I'd rather have, like we have a lot of apartments. I used to want 50,000 apartments. Now I sit there and say, I want 3,000 to 5,000 really, really well-run apartments because I realized that at a certain point, you just can't do the job you were hired to do. Like, look at Warren Buffett. He can't make 50% returns. He cannot do that ever because
too much capital.
Yeah, too much. You can't compound it. Yeah.
And that was a big change for me going, well, Paul, the very thing you used to want would actually make it harder to enjoy the things you actually like doing, which is getting good returns, finding good deals, and not just placing money everywhere. Mm-hmm. But that was part of the business side of it. The personal side was just realizing when I was 30, and looking at my net worth and going, I remember when I was 18, I wanted this net worth and I thought life would be perfect. And life isn't. Doesn't mean life sucked. It just meant that it wasn't perfect. And I was like, okay, then I'm missing something here. And that was it. And I'm 41 now. I don't know how old you are, Chris. I think you're probably early 30s.
I just recently turned 35.
Okay, great. So you're a little older than Mo. And so when I heard you say something earlier, so you asked me that question. Are there things in your head that have been going the same way?
Yeah, 100%. I mean, I think this CMQ for me is not something it fits within my business because I'm using myself almost as like the product to try out ideas that I know will work.
Right.
In terms of just this new called the creator economy. I mean, there's things I've been able to bring to the table for clients that I've experienced doing experiments like for CMQ with someone on my team. Again, me being like out here in the face of it, but this was something that I reached a point where very much, I think like you, I had certain financial milestones I wanted to hit. And, it was very much like that to me was, I didn't expect it to bring me happiness, but I didn't have it figured out, or I hadn't thought about, well, okay, when I hit that, then what am I going to want and what will be the motivation? I think for me, the challenge has been, and I feel like I'm coming out the other side of it sort of now. I don't want to get ahead of myself, but it's a matter of like, okay, I could keep doing exactly what I'm doing and it feels great. And the roller coaster keeps going up and it's a good feeling. And I know I can keep that going. But then there's the part of saying, no, wait a minute, I have this, this independence now. What is this quote unquote success afforded me to do that, I could potentially regret not doing.
Mm-hmm.
And part of it could be like growing from 10 years old on in Florida and seeing a lot of, generally speaking, older people who've retired and them trying to do the things that they wanted to do and not being able to enjoy it as much. And for me personally, I'm not talking about like going on vacations and I'm just a workhorse, but I knew that and actually Charlie Munger, probably an inspiration for this, when he was a lawyer after about, I think it was 10 years in or something, he started giving himself an hour of his time a day to just read and learn. And that's kind of what I started doing with investing right before the pandemic hit. And, the pandemic wasn't even like in our minds at that point. And when that happened, I was like, okay, I had been interested in dabbling with investing prior to that, but then I was just, reading 10Ks every night and that kind of thing. And so then I just kind of accelerated, and the Charlie Munger quotes page came along, and fast forward to right now, this for me is not, on paper, it's not a moneymaker. And there's part of me that says, okay, this is opportunity cost. I should be, I'm in New York City. I've got a great reputation for what I'm doing. And I could be, again, doing like keep going on the escalator up and just pursuing more. But there's something I'm getting satisfaction. There's a satisfaction to this but I still, I think, struggle a little bit with that, allowing myself to do this, right? Because it's like, it feels, everything I was wired to do up to that point was like grind to like make more. And anyway, that's where I am right now. Not to do too much navel gazing, but it's definitely one of the things they don't like. I don't know. It's not a bad problem to have. I'm like, oh, I'm successful, and what do I do now? It's like I'm not complaining, but I definitely could pick your brain on that probably some more.
Well, we probably could talk about that a lot more. I mean, Mo and I, my brother, him,
Talk about it a lot.
Yeah, we do, because like I said, it was, I literally thought more was better. And over time, you're just like, listen, and again, it's funny because I don't want to be perceived as a hypocrite. I still like very nice things. I still enjoy owning a very beautiful home. I still enjoy all these superficial things that are absolutely adding zero value to my life in the sense of not making me happy. But the key is, if they're taken away from me, do I feel like so right now I'm in between houses. My fiance and I are finishing this beautiful, large home. We currently live in her 2,250 square foot house in a suburb of Cleveland. Literally 15 years ago, I would have just said to her, we got to go rent someplace. Like, I'm not going to live in this small house. Now I'm just, okay, we're living here. I don't feel, the only joke I make is our cars are not, congruent with the neighborhood. And people just look at us going, like, we pull in with these cars and they're like,
dealers.
Yeah, what do you do for a living that you live in this house that's not even worth $400,000? Your cars are probably, it's like, that's the only thing. And we just laugh about it. But before, it would have been, oh my God, no, the cars in the house have to match. And it's like, I don't know. It's just these things that you start to realize. I remember reading Deion Sanders, like back in the early 90s, bought a $250,000 Lamborghini. And he said, I sat inside of it and I thought this would be the ultimate. And I just realized it wasn't. Yeah. Like it didn't, I wasn't. And it's like, okay, then you start these little things here and there trickle in. And again, I still have a very wonderful financial life. I still enjoy very nice things. My fiance and I go overseas 4 to 6 times a year. We love traveling and we're going to continue to. But at the same point,
I have this.
Go ahead.
Yeah, no, I know. I think I have this paranoia, and it's totally irrational. It's probably one of the reasons why I enjoy the rational sort of, working on rationality all the time. Is I'm always, I tried doing this thing this summer, right, where I said I'm actually going to give myself a couple days at the end of the month, and I'm not going to work at all. And I'm not the only person that works hard. I'm sure we're all kind of like this, but I'll I'll work on my birthday. Like I enjoy what I do, and it gives me a sense of control over my situation and what have you. And but I did this summer. I did that in June, July, and August. And again, most people like are going on vacations and have no problem doing that. For me, when I found myself, it was great. By the way, totally. If anyone out there is listening and feels like that's something you should try, it definitely was worth it, and it showed me that I should do that more because you're just more come back stronger. But when I thought about in that, like, just in those moments where I wasn't working, I had this anxiety, like everything was going to start like trickling away.
Yeah.
And that's this thing where I know that doesn't make any sense. And that's the kind of thing where it's like, just like I'm sure we've all like developed ourselves in certain ways where you can great work ethic, putting your brain to use and making things happen. But then it's like I need to work at just sitting on a bench and enjoying like an afternoon for a half hour and being able to not like freaking out in my head about like, all right, you got to get back to it. Like that is itself something I'm immature on something like that.
Well, it's funny. Our Mo's girlfriend and my fiance always they're my fiance recently retired. And Mo's girlfriend, she sells insurance and she does great with it. But the joke amongst them all is, so my fiance's nieces and nephews and her in-laws were at the hospital. And I'm just like, and I get there at 3:00 and they're like, oh, it must be nice not to work. I'm like, it really is nice. But because I've made it the joke that I don't work because I joke with people, Lisa, but then my fiance always said to me, I can't believe you want to work till you die. I'm like, because I don't work. I just really do whatever I want to do every second of every day. And yes, I'm fortunate, but there was a time when I was working 80, 90 hours a week and I hated it. And now I don't even keep track of it because I joke with people. Oh, that person works hard. What does that mean? And then it always stumps people. What does it mean to work hard? Like to me, it's just who gets more done.
Yeah.
I would want to get 8 hours of work done in 2 hours and have the rest of the day for me than be the guy who just wants to fill the work all the way through to make me feel like, oh, look at me. I'm working 8 hours a day or 10 hours a day or 12 hours a day. It
goes back to the studying in school. You sit there in the library for 8 hours, but you really studied for an hour.
Yeah.
You just sat there, but hey,
working
I studied for 8 hours.
Working out, Mo.
Working out.
I work out in 25 minutes what people do in an hour. Why? Because I don't take 5-minute breaks every 5 minutes to just shoot the shit with my friends. I'm in the gym and I'm like, okay, 26 minutes, I'm done. 27 minutes, I'm done. And we talk about this all the time, but I used to feel guilty about that, Chris. I used to feel like, oh my God, like you said, what's happening with the business? What's going on here? Like, is it falling apart? Now it's just, what do you guys need?
Yeah.
Why are you reaching out? Like now the comment is, why are you asking this question? Why do you ask me? Like, you should be able to handle this. Because it goes back to the whole thing. If you can't do this on your own, then what do I have here? I don't have a business. I have a sole proprietorship that goes away once I go away.
Right.
And that's what we want to avoid.
I wonder if going back to that comment that Warren Buffett has said, I wonder if that, I'm speculating here, if the idea of eventually an idiot will run it, that you need someone who's not an idiot to kind of get it rolling first, kind of like where you would still...
Maybe so.
So I think that's probably true. I mean, to create the great business, you probably need someone that's not an idiot. At some point, it's going to be surrounded by the right people where even if an idiot is in charge and the business is great, you can survive the idiot.
Yeah, but I've also realized with our business that I do believe, and I'm not saying this to be cocky, I do believe our company is called Crossroads Group. I do believe it will be great because of the things that I started. But it's all because it's good. But it's gonna, no, sorry, I shouldn't say that. It's really, really good because of the things I did. It will become great because I taught everybody how to think this way. Like to me,
and I would say,
go ahead. No, go ahead.
No, I was just going to say, I think there's nothing, I juggle with this all the time because, one of my biggest, simple epiphanies with investing is, overconfidence is the killer of all. And, that's what gets us just absolutely slaughtered 9 out of 10 times in investing. But there's a use for overconfidence in life where, just starting a business, I know, we've been in that same boat. You have to take a plunge and believe in yourself in a way that is somewhat irrational, right? Like the odds, if we could, just going off of like prior probabilities and, or the base rate, like it's not, the odds are not in your favor. And that's being an entrepreneur. You have to kind of say, well, you know what, I'm going to make this happen. I don't care about what history or what people in the past have done or how they haven't done it. So I think when you're in the mode of building the business, I think it helps to have that, you want to be the best of the best. I get a lot of inspiration. I call it YouTube inspiration. I'll watch, the best athletes watch them do their training for 5 minutes. I used to, before he passed away, Kobe Bryant, huge motivator. Just, being like, had all this talent, but said, he watched the movie Rudy. And he said when he saw that movie, he's like, if I worked as hard as Rudy did with my skill set, like I could be something exceptional. And that's what, I think I was surprised to hear him say that, because Rudy is such like I wouldn't have expected that, but that's that kind of mentality that I think is required, but it does kind of make us, that mentality doesn't work as well as investing. We're like, I'm going to buy this stock and I know what I'm doing, and screw what everyone else says. Like, it's this, our brain has to kind of toggle both sides.
Yeah. And the confidence level is, I think with investing, the confidence is most important, not this hubris of, so I look at real estate. Real estate, we have a lot of real estate. We have apartments. I do have this like borderline arrogance about real estate. When I do a deal, it is going to go well, but I pull the trigger very rarely. Very, very rarely. Like I am really waiting. I'm doing the whole 20 swings in your lifetime on real estate. I do not do a deal in real estate unless I am like, okay,
super confident.
We're not. I mean, it's funny. I once heard a real estate guy say to me, well, Paul, some deals make money, some deals don't. I just looked at him and go, then you don't do then you're just doing any deal you can. Because to me, it's, some people, the biggest criticism I get from people in real estate for me is, Paul, you're too afraid to pull a trigger. I'm like, I'm not afraid to pull a trigger. I have limited capital. I have very limited capital. And this, relatively speaking, I don't have $100 billion. So I can sit there and wait for the right pitch to get me my outsized returns. And that level of confidence, there's a difference between arrogance and confidence, right? Like I've met arrogant people. To me, arrogance is your confidence and your abilities don't match up. You have way more confidence than your abilities. To me, in certain areas, I just wrote an email, good stock's cheap.
Oh yeah. Kenneth Marshall.
Kenneth Marshall. We interviewed him. He emailed me today and said, Paul, my new version of my book came out. I want to send you a copy. I said, great. And he said something about Jeff Bezos. I said, Kenneth, give me your take on this one. And to me, Amazon is is my too hard pile. So here's a guy who people think is arrogant. Like people look at me and probably think this guy thinks he knows everything. And I look at Amazon and go, I just don't get it. I got to avoid it. Like to me, I look at that saying, isn't that a testament to my ability to say, I just don't know something? Okay, I'm good. My sister-in-law is having health issues right now. We're at the hospital and everybody has their opinion. And I'm the one person saying, guys, we're at the Cleveland Clinic. Let's trust the Cleveland Clinic, not WebMD. Or not something we research. Doesn't mean we don't verify, but there's 30 opinions happening in the room. And I'm like, we're at the Cleveland Clinic. Like I'm the one guy who should be the most arrogant guy in the room. And I'm like, we're at the Cleveland Clinic. My father's an oncologist. I do not call him for advice because we're at the Cleveland. And I think my dad's brilliant, but it's not another thing to throw. Mo's dad has the same job. I don't know. I'm just saying it from the standpoint of arrogance and confidence are components of each other. A confidence is a component of arrogance, but it has to me, in relation to your knowledge level and your skill set, as Kobe said.
And I think confidence comes from doing the work.
Yeah.
Confidence, I know it's one of the reasons I think I'm a workaholic is because when I'm in any situation, I know anything can happen, right? But I'll never feel like, oh, I didn't give it my all.
Mm-hmm.
But this brings up something I think is pretty interesting to think like this. I was listening to, I wish I could remember who gave the lecture, but he recommended going through Discover magazine because the folks that get interviewed in there, it's like they're sharing what they've learned, in their entire careers and their various fields and expertise. And so I got this compilation of all these Discover magazine interviews, and there was one with a gentleman named Robert B., who is he's been called the master of disaster. He studies and does the autopsies on system engineering disasters, and from the Challenger to the BP oil spill, and on and on. And he said the root cause of all these human tragedies, in almost every instance, it's hubris and greed.
Mm.
And you mentioned hubris, and I think of hubris as like that arrogance. It's beyond confidence, and of course, greed is present as investors. We have to be, we have to be very mindful of that. But you see so many things. Just when you take it back to the root cause, and you mentioned we were talking about Lee Liu earlier. I forgot to mention this part. He said when Charlie Munger will take all these mistakes or inanities, he'll try to trace them back to the root cause. And I tried doing this myself. And again, it's not I think it's kind of an ongoing thing, but sure enough, I mean, it it seems very obvious when you say it, but I found from this gentleman, I think he had 60 years of studying and helping correct prevent future disasters. And the other one, complacency is another one.
Yeah, complacency is the worst.
It's a dangerous one.
Huge. Yeah, there was an article so I have this book called University of Berkshire Hathaway.
Yeah, I have that book.
It covers, I really enjoyed it, and it covers the years before they had they were filming it. And so, as I mentioned earlier, I've gone through all the videos, so then it was like, oh, this is kind of like the dark years. And when I was going through this, they had Warren Buffett recommended, it was Carol Loomis wrote this article called The Dinosaurs, and she looked at why some of these behemoths of their industries had just kind of fallen off. And one of the things she mentioned is like never become too impressed with your own success. Be too comfortable with your moats, or kind of rest on your laurels, because that typically it's a sign of, doesn't mean guaranteed the company's going down, but it can be foreshadowing.
No, I agree with that. We always talk in our company. I always say complacency is the biggest thing I fear. It's because I do believe we hire learners. We hire people who want to get better and learn. And by the way, arrogance is a relative thing. A lot of people think Warren Buffett's extremely arrogant, and speaking of dinosaurs, like, oh, he's not changing with the time. So whenever people say these things, I go, it's still relative to the person mindset that's saying it. I've met people before that I thought, oh my God, you don't realize how arrogant you are. And guess what they probably say about me? A lot of people call me arrogant. Am I arrogant? I'm sure in a lot of ways I am. These are the hard things in life. Like it's easy in hindsight to say this caused this, but at the end of the day, it's
right.
Like we're value investors. Is it possible it's different this time? Sure.
Everything's
possible. Is it probable? Well, what if it is different this time, Chris? What if all of a sudden, I think about a lot? I've been thinking about a lot lately. In 1928, 1929, the great the crash, only 5% of households had stock. What's the number today? It's like 65% or something.
50.
Maybe it's 50. I don't know. So I look at that saying that has to change the dynamics of the market in some way. Does it change it in the sense of we have a permanent bottom? Probably not. To me, what I would have thought was the extremes would become bigger and bigger. Because look at it. Up until 2000, the highest we ever got on stock market GDP and 10-year cyclically adjusted PE was like 26.
Yeah.
And since then, we've beaten that number like 3 times. It's like...
The extremes are bigger now.
But we haven't had the low extreme in the last 22 years.
Extreme.
So these are the things that I think about that hopefully allow me to sit there and say, okay, Paul, you're at least thinking about it, because I have to believe there is a difference between 5% of companies have stock, 5% of households have stock versus 50 to 60%. There's got to be something there that changed it. What is it? I don't know. I'm not trying to diminish what Warren Buffett's done, but it probably was easier to find good deals back.
I've heard them say that many times. They'll say, there was a clip, I think it was in the 90s of, if I was starting all over again, with $10,000, I would start from the A's and go through the small caps and look for bases. It's not as easy as it was back when I was younger. And I think he mentions like flipping through the movies. It was called movies catalogs, where you could just, you look at it, stuff would just jump out at you.
Yep.
And there was only so different now how many people are actually looking. Let's imagine that there's a catalog we're all looking through, metaphorically speaking, except Cathie Wood, who's working with her researchers. But
Ouija board.
Ouija board.
Yeah. Speaking in tongues. I was imagining her speaking in tongues. But she is there's so many people flipping through the same catalog now. And so, it's harder to find those really great opportunities. And it's like we mentioned earlier, you have to find something that typically everyone else thinks stinks. You get to see something others miss. And I think Howard Marks talks about that in one of his memos in the book, Second Level Insights. I remember reading that on a plane several years ago, and I was like, that makes so much sense.
Wait, so you're talking about first level investing versus second level investing?
Yes, when you have to know, you have to disagree with the consensus and be right.
Yes.
And there's not a lot of moments where you can really do that, but that's kind of not that there's these predictable patterns, but that is very rarely are there going to be times like when everyone's like, "Yo, Tesla's cheap right now."
Right.
Yeah. Just on that, because we know that's just not how it works. Like where everyone gets to get rich.
Well, do you know my analogy, my joke always is, I'm so contrarian that everybody says the sky is blue, and it makes me really wonder, is the sky really blue? Because that's my joke, because I look at it going, that's just the way I'm programmed now. When
To It's really funny. I actually instinctively just looked at her.
Right. But that's something that, so on my channel, it's like, it's funny in our chat, some guy wrote to me recently. He's like, that poor caddy has no idea you use him. When I was on a golf course 2 years ago caddying, the kid told me how he recognized me. He goes, "You're wrong on Palantir, Tesla, and Bitcoin." And I looked at everybody, and I was with a bunch of friends. I go, "Guys, when the 18-year-old caddy at the golf course is telling me I'm wrong on these three, I'm probably fucking right on these three." Like, that was my kind of like point about it.
And this blows my mind. I said to people, like, during the pandemic, as I mentioned, I've been, doing investing, before the pandemic started. I got like, I have an obsessive level, like, kind of, that, like, I think a lot of our favorite investors, where I just poured myself into it. And I started reading, make sure I read like all the classics. And there's not a lot of classic investing books you have to read. Like, we're not talking about the canon of like English literature.
Yeah.
It wasn't like, it sounds great. I'm not trying to sound like that, so studious, but it was pretty interesting. There's maybe, I don't know what, like 10 books that if you read them, what I realized is a lot of the people who are in these positions of influence and not just influence, but supposed to be the experts, they haven't read one book.
But they have them on their bookshelves.
They do have.
They have on their bookshelves.
And they look really good.
Totally. Yeah, and it's like with the thing going back to, like, and this is a good example of the hubris, like the caddy, and I'm not, the caddy is watching, shout out to him, I'm sure he's a good guy.
No, he's an idiot.
But the fact that you could say that, like, oh no, trust me, like, I said, I have friends that are really into crypto, and they talk about the monetary policy and the Fed, what they're doing. I said, name the last 3 Fed chairs. Greenspan, you know what I mean? Like, there's not. It's like, how are you gonna? You're lecturing me on how much money we print. And,
right.
We're all, the world's going to hell. You don't.
Oh well, no. Here's the thing. But here's the funny thing about crypto. I'm a strict libertarian. And everybody's shocked and they're like, "Paul, how are you a strict libertarian? You're not in favor of Bitcoin." I go, "Listen, I'm in favor of government." Yeah, and I'm in favor of government deregulation, but at the end of the day, that doesn't mean that any sort of opportunity for deregulation I'm in favor of. I still like the fact that we have a court system. Do I want it to be more efficient? Absolutely. I still like the fact that we have a police system. Do I want it to be more efficient? Absolutely. Like, I'm just sitting there saying, it doesn't mean that I just believe that just because I believe, it's just a free for. I mean, come on, let's pump the brakes here. There's still about pragmatism and just making sure that I understand that. It's funny about the crypto because I don't know, the crypto thing just melts my brain.
I love
it. Absolutely melts my brain.
I really love that the crypto people now are screaming for, hey, we want regulation. It's
and
like,
that's the funny part. It's like, guys, you're going against
anti-regulation.
Exactly what the purpose of crypto is deregulation.
And they want their money back.
The whole thing is so. I mean, I made some money, and again, it was luck. I want to acknowledge that, and that's why I was able to get out and not, face the rising prices and things like that. But I was somewhat early, and again, it was just like, oh, okay, this makes sense enough, and like it's going up, and it was, I guess, a bit of luck. But so I'm not against crypto. I always say this, like, I think the technology is cool, but as far as like, it's very basic. Like, the reason it doesn't make sense is simple. It's in the 2011 Berkshire letter. This is one of those instances where Warren Buffett described it so perfectly. He was talking about gold, and it took me a little longer than it should have to get my head around the whole like non-productive asset thing.
Yeah.
I was just kind of like, because I try to learn things and then be able to actually know it, not just like parrot it back. And I remember that was one where I was like, I got it, but then when I read this, I'm like, oh, now I really get it. And he talks about, in general, like the same patterns with gold. It's usually this fear over the currency.
Mm-hmm.
The rising price begets more attention and awareness, which gets the price going up higher. At the end of the day, and I think one of the issues in finance is, I'm curious your guys' thoughts on this. So there's some names of things that almost make it where people are not going to be willing to realize they're wrong. Like the idea of it's called greater fool's theory.
Oh, yeah.
I can't tell someone that because you think you're calling them a fool.
Yep.
And there's a few other examples like that, but it's the same pattern where I was talking to a guy the other day, and he's like, "Oh, I don't know, crypto." I said, "Look, nothing wrong with it, but it's just based on if you think someone will buy it for more later."
Right.
And if you compare that to like if I own, and Warren Buffett did this great example, but you could take all the gold in the world and like put it on a baseball diamond. Always like some folksy kind of example, like it's either like the moats, like the medieval times, or the baseball diamond. But we can do that, and in 100 years you'll still have all that gold.
Right.
Or you could take that same, whatever the value of it was at the time, and buy that much of ExxonMobil, and at the end you're going to have everything that's on their balance sheet plus all the dividends it's given back to you, et cetera, et cetera, et cetera. And like this idea of like it's doing something and giving it back to you versus like you're just hoping someone. Anyway, you guys get it, so I'm not trying to explain it to you, but but the people that are into it, it's like it's weird. It's like they're justifying. They don't want to acknowledge they're just trying to make a lot of money really easily, and they want to make it like as part of a bigger purpose.
Yep.
And the same thing I've studied, like what leads people into cults. And I don't know if you watched the Bitcoin conference last year.
No, I did not.
Definitely not.
So you missed it. It was probably. I watched it twice. They had one of the keynotes. You're gonna die. One of the keynotes was Michael Saylor and
jeez,
Cathie were.
Oh my gosh.
And that's when she dropped her line. She goes, and if our research, if we're right, we see Bitcoin at $1 million per coin, 2030. And that was when she first said that. And everyone, when Michael Saylor came out, literally guys were doing like the Wayne's World, like.
Were they really?
I swear to God. And then the guy, though, before he got up, who introduced them, he said, it's great being here, and I've been orange pilled. I brought my dad, and my dad said, God, everyone here is so positive and so upbeat. And I was reading this book about, again, going up the Charlie Munger tree. He got into understanding the Moonies and the cult of the Moonies, where like when these college students were going away for a weekend and then coming back like totally brainwashed. There was an article I found of someone who had been one of those college students, became a leader in the cults, and then their family did an intervention, and they like are now educating people on how you can get caught up in cults. And one of the very first things, like they all do, it's love bombing. Everything is just it's so positive. And if you're negative, you're like, get out of here right now.
Yeah.
It's all about just everything's so great. And it's watching it. It's like they can't see it, but that's exactly what this is. It has all the similarities of.
So my comment always is I believe Tesla and Bitcoin will be the poster child of this bubble, and I think and I look at Bitcoin, it's just kind of like the .coms. 5 years after the .com crash, you had people saying, "Well, come on, it was obvious." It's like, well, what made it obvious? The Charlie Munger thing. Go in the future and see if this didn't work out. What was it? Well, you paid $5 billion for a company that had zero revenue. That didn't make much sense.
Right.
So you're looking ahead saying, if I came to you right now and said 20 years ago there was this digital coin that was created, but it wasn't just one digital coin. They made like 20,000 of them, and they went up and down in price based on what was most popular that week, and they had nothing backing it. Does that make sense?
And celebrities could move the price with tweets.
You know what also doesn't make any sense? And this is something that's like, I'm glad I could talk to sane people right now. First it was going to be the currency that we're all going to use.
Yep.
But then they said, okay, you can buy. It's going to go to the moon. So then they started, hey, you can buy a movie ticket with this AMC. You pay with crypto. Well, that'd be the most expensive movie ticket I'd ever go to see, or expensive movie I'd ever see, or the most expensive car I'd ever buy. If I bought a Tesla with a Bitcoin, and it's going to go to $1 million a coin, so it didn't make any sense. And then they said it's an inflation hedge,
Right?
Which obviously, that's a joke. And then what they started saying was, no, the hedge was before inflation.
Oh my! By the way, no, Chris, I'm sorry. I was about ready to interrupt you and say, wait a second. The thing that I was told recently was, no, Paul, it was a hedge. Look, it went down and then inflation went up. I was just like, it went up and then inflation went up. I'm like, is this a joke? Like I literally wrote back, is this a joke?
Oh, there's a guy. I don't mind calling him out because it's not like I'm not ruining his life or anything. But this guy, Pomp. He's like the biggest Bitcoin pumper in history. I cannot stand this guy because he's so like dishonest, and he'll take anything and flip the argument around, and it makes me irrationally upset.
Now,
now they're all trying to rebrand themselves now. Like they took all the laser eyes off their Twitter icons or whatever, and like they're now doing like, oh no, like he's trying to be Tim Ferriss now, whereas literally he was like they were selling hats on Twitter. Bitcoin 100,000. He's selling merch.
Can we buy one of those hats?
Hey, it's back. I would buy one. I want to buy that, and I want to get an ARK Invest like Patagonia.
If you ever get one, please reach out to us. I'll just want to have you order some for us. And by the way, have you seen the Bitcoin people saying it's at 21,000? We're back, baby.
I know, it's so funny.
So I posted on my Instagram.
They were like, no, these are the same people that were saying, have fun being poor.
Yeah, I posted on my Instagram that Bitcoin's up 21,000, whatever it is. I was like, damn it, I was wrong about this.
That's right. He said, damn, I was wrong. But that's literally what it is. Like and by the way, it's the,
You know what's funny?
it's the typical bear trap rebound. Like
But
it just,
I'm getting crypto people DMing me and being like, finally, you can admit it. And these are like legit crypto bulls.
what do you mean they can admit it?
Like when I said, damn it, I'm wrong, I was joking.
Oh, they
But
said,
they're like, see, we told you. I'm like, oh, okay. All right.
It's a good example of the confirmation bias.
Yeah.
When people when they really get into it, they're not able to see anything else. Like, they've been like.
well, they think the same of us, Chris.
That's true.
What's that?
They think the same of us. The difference is our process. I mean, it's not a coincidence that the best investors ever all talk exactly the same.
Yeah.
And they're all,
You know what I'll
go
tell
ahead.
you?
Go ahead.
No, I didn't mean to interrupt you.
No.
I apologize. The thing that I've gotten, like I got obsessed with this because he's always talking about it, and he said before, like it doesn't get through to people. So I kind of was like, I'm going to crack this code. Kind of what I do in my true professional life. I was like, I can crack this algorithm, which is about the multidisciplinary method or multidisciplinary approach to thinking. What I like in the Hagster book I mentioned, I think does a good job of kind of like introing this, is the ideas that we're talking about, they actually agree with reality. Like the things where, the basis of how we invest, right? Like the idea that we're going to if you're going to do individual stocks, you want to have a concentrated portfolio, because if you actually know anything, you want to load up on those opportunities. Like that is statistically a sound thing, or just, playing the probabilities. Even the idea of like the world doesn't not everybody can make a ton of money for doing nothing, right? Like that's not, when everyone was talking about this past, what was it, maybe a year or so ago, when I saw this through my Instagram page, I'd see all these different accounts, like, luring everyone to go buy Bitcoin because this is your path to financial freedom. And what is that thing they always would say that, they'd show like the world population growing, and they're like, we're still early. That kind of stuff. Like that is fundamentally, the world doesn't work like that, right? And we can break down why that is, but I think if you get the big ideas from all the big disciplines, like basically the concepts in the 101s, whether it's in biology and physics, and we could go down the list, there is just nothing that really agrees with this idea that we can make something out of nothing, meaning like a cryptology, as technology, if you want to call it that, assign it value, and then like the idea too, like talk about incentives. The U.S. government's just going to like bend over.
Right. Well, then by the way, that's our biggest argument is, guys, you're telling me the U.S. government's going to wake up one day and go, you know what? This is a legitimate threat to our currency. Let's just agree to it.
Let's take
Let's
it.
just give in, guys.
Let's take it.
Yeah. You know what?
What's more likely, that or them saying,
We're
banned?
done with this.
Yeah, like
We're done with this.
we don't give an inch. Like there's no. Oh yeah, well, you know what? Forget the dollar. We printed too much. That was our bad.
Right.
Like it's absurd.
All right, so small little break there. So we're talking about SBF, how he talked about FTX is solvent. So go ahead and say what you're going to say there, Chris.
Well, I want to say I'm not a mean-spirited person.
I am.
I have something very that bothers me when people, take people for their life savings. That makes me really upset, especially when there's a certain level of just denial of reality. And I'm such a good guy. The Sam Bankman character to me is just, if someone's going to be a scumbag, like just own it. And this guy is,
like Charlie Sheen.
He's not owning it. Exactly.
Yeah, but he's the benevolent billionaire, and I think this thing I read, I think a few days ago he posted it, but I got around to reading it yesterday. Is kind of response to everything on Substack. I mean, reading this, it's like reading a delusional person's thoughts. What he says about just none of it was his fault. It was a perfect storm, and he never brings up the fact that and again, I'm going off what the SEC said, and again, he'll be found innocent or guilty. I'm not saying he's guilty now, but there's no one's denied the fact that they were using FTX customer deposits, and he's sending that over to Alameda and doing it in ways that were very nefarious, where they would have the account would be called like FTX at something. So it was, it was deliberate. It wasn't like, oh, we didn't mean to. There's intent there. The fact that his ex-girlfriend and the Alameda CEO, she flipped on him immediately. I mean, he's
so fast.
Like a made-up thing.
Yeah.
And this thing he wrote on Substack blames everybody but himself, and he keeps talking about how, he keeps saying that the U.S. branch is solvent. And I think it was yesterday I read in the journal that it's come out that in fact they're actually missing a lot of money in the U.S. Side as well, so they couldn't pay back people. And I think people sometimes forget, like, this guy is a master at spinning the narrative, and he did a really good job of that. I mean, he did and I'm sure it was other people too, but he did all the right moves he almost single-handedly like legitimized crypto at one point.
Yeah.
They had him. I learned about him through. I could go off on a dovetail here, but yeah, I mean, I think this guy is the biggest dirtbag, and I just think that there needs to be. I feel like we're at this point now where people don't get consequences for their actions.
Yeah.
And I think that sends a really bad message. You think after like a Bernie Madoff, I'm ashamed that someone who's like in my ballpark age range is it's not a Ponzi scheme, but it's egregious, and he just has it's a phony deal. The guy's a phony. I'm gonna say I don't body shame, but he's a fat vegan. It doesn't make any sense.
Yeah, but by the way, when I saw him and they said he's a vegan, I'm like, wait, what? I'm like, how do you get overweight when you're vegan?
No, he's like, I just want to save the world, and he does that. That press tour he did where he was going around and he was talking to him. So uncomfortable to watch. And
everything about his is uncomfortable.
Well, do you see what Kevin O'Leary said?
Oh, that's cool.
Well, yeah. No, but wait, when Kevin O'Leary first backed FTX, he said, guys, both of his parents are lawyers. Compliance lawyers. Like, didn't he say something like, this is as safe as deal?
This is as good as it gets.
And he said they're American too. He's like, they're American.
Yeah.
Is that what he said?
Yeah.
He actually said they're Americans, and that was the point.
Yeah.
And the funny thing is, like, I'm sure they're espousing this whole, like, save the world and corporate greed stuff, and yet they're, living in $20 million penthouses or $7 million, whatever the price was.
So, Chris, I just sent you on Instagram I just sent you this article that I wanted to show you, and it just shows all of his different holdings that he had in the Bahamas. And it's like, wow, he had all of this down there, and that's where a lot of the assets are now.
It's just the idea again, trying to play like I'm a good guy thing.
Yeah.
He's obviously not a good guy. And I'm when I say this. When I read the SEC charges against him, go through it's like a 30-page document.
Yeah.
I was reading, I was like, it's very dark. I mean, the stuff they were doing is nuts.
Well, it's funny because no, go ahead.
I was just saying when we were on the break, and I don't have the exact numbers in front of me, but it was in the hundreds of millions of dollars that loans were given to two of the main guys. And again, I've not heard anyone say, well, what happened to that money?
Right.
What was the loan for?
Right.
He talked about in this Substack article, he said, well, I've offered up my Robinhood shares to give back to customers. They're not yours, dude. That money, they set up a shell company. I don't know if it's a shell company, but it was a company that wasn't doing business.
Yep, I remember reading this.
The money for Robinhood from Alameda, which he's like, I wasn't running. He's like, I wasn't running Alameda. That was Caroline, the snitch. By the way, I got a little side note here. I did, whatever the voice I did of him, people really liked, so I leaned into it a little bit. I did a fake voicemail for him.
Oh yeah, people thought it was real.
They thought it was real, and
it was really good, by the way. It was really good, Chris.
I'm gonna have to listen to this.
They put
it was so good.
People do they put this eerie music on it, and he's like, I can buy you. He sounded like the worst human being. In my mind, the Sam Bankman SNL character, he's just this degenerate evil person. He's like, I just want to help people. So I did this. I didn't put this out, and if this gets cut, I get it.
Nothing's getting cut. Nothing gets cut.
So I did this thing where he calls from jail, and he's on the phone, and so he's like, hey, it's Sam. And I have the filter on. He's like, yeah, so look, I did some stuff, and I feel terrible. I'm terribly sorry for what happened. And then he's on the phone in jail or whatever. And some guy's giving him. He's like, 1 second. This guy's giving me the iPhone. What are you looking at? What are you gonna do about it? It's Bankman, kid. And he's like, hey, he's true. I'm so sorry. And that's me, Sam Bankman.
Okay.
And,
you need to go. So we've done some of our own where I put the wig on and we actually did an arrest and stuff. There's 2 or 3 YouTube videos. You got to go watch them. And one of them was him preparing to go to jail when he was at home after he paid his bail or whatever.
No, I would love to. This is something I give you the exclusive. I started making these parody songs for fun.
Yeah.
Just with the and I did one scooping around with a friend last night because just kind of we're laughing. and if I don't put it out, I'll send it to you guys. But I do it like in his voice, and I took remember that song "Riding Dirty"?
Yes.
Oh yeah.
Chameleonaire.
So it's like it was the money stolen. Anyway,
No, Chris, you gotta put that out.
Yeah.
You absolutely gotta put that out. Hey, listen, people. First off, people. It's appropriate. I'm sorry. I hate to be a jerk about it. Like he is doing a.
This is literally. You couldn't make this up if you made a comedy. All of this, like a movie.
Yeah.
You couldn't make this up.
No, I would have never imagined a character.
100%.
And
the
it's funny
ties
because
that he
there was a crypto idiot in our group chat, and this person's like the worst investor of all time. He's literally the person where you look at him, go short everything that guy touches. So his defense of FTX collapsing was, it's not a Bernie Madoff, it's Lehman. I'm like, that's worse. I'm like, what are you like? He thought that was a defense of it. I'm like, that's worse.
No, in Bankman, in this Substack thing, he mentions Lehman. He's like, it's actually, there's examples of this in the past, and he like indicts himself while trying to defend himself, and it's just, I don't know I think he honestly thinks he's gonna like maneuver out of this because because I feel like everything he says is very calculated.
Yeah.
Again, his parents are both law school professors, so there has to be some like, he'll use people who are really up on law will say like, oh, the way he said, we're substantially whole, like that's technically not saying we're whole or whatever. It's little nuances like that I wouldn't have picked up initially. But yeah, just a terrible person. I would feel guilty. I mean, I can't imagine walking around and not like collapsing under the distress and knowing that he was at, I mean, this wasn't like, oh, this just happened overnight. Like he was walking around with this on his chest.
All right.
Yep.
All right, here's what we're going to do. Here's what we're going to do.
He was legitimately the adult in the room in the crypto world.
All right, here's what we're going to do. What do you think the prison sentence is going to be? I'm going to let you and Mo both select one. Whoever's closest percentage-wise, I will give $100 to. It's nothing big, but I'll do $100. So what do you think what do you think? Don't change your... Mo, you text me yours.
Okay.
And then once you text me yours, I'll ask Chris to give us...
Can we, if we go over, does that mean we're disqualified?
No. It's not the price of right rule. That's not the price is right rules. It's like whoever's closest, I'll do it within percentage of the actual. So let's say, for example, he gets 30 years. It's within, if you say 60, you're 100% over, right? If you say 15, then you're 50% under. So you're within, you actually win by, actually should just be total time you're over or under. That's it. Just number of total time. Did you text me yet?
There.
All right, Chris, what do you think he's going to get? Oh, wow. Really?
After he says his number, I'll tell you my reasoning.
45.
Oh my God, it's exactly what
We
Mo
literally said the same number.
Mo literally said exactly 45.
Mine is, I think they're going to make an example out of him. Initially, I typed in 90 years. Just put this kid away. He's gone for life because Madoff got 150.
Can I tell you? I think he's going to get less than 20.
So I was also going to put, I could also see 4.5 years.
Because I think he's going to plea down. I think it's going to get exhausted. And I think there's going to be so many more other crypto crashes that happen
that
it's going to be like, because right now people still believe in crypto. And I just think it's going to be one of those things where it's like the real estate crash, MBS's CDOs back in 2007 and 8, it's just going to be expected for the industry. So they're going to be like, it was just kind of expected. I think he's going to get way less than 20 years.
Or they'll give him
way less.
Or they'll give him a bunch of years of like this and say, crypto's fine. It's not going to go anywhere. This is taken care of. We are going to make this a safe industry.
But how's that going to affect his penalty?
Make an example of 45 years.
Okay, so that's funny. You said the exact same number, Chris. Like literally, I read it.
Yeah.
I thought that was too high. I said his number. I'm like, I think that's too high.
The cynic in me thinks it's, and I gotta stick by my number. But the cynic in me is in my ear going lower, 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 because something about just the connections that he has in terms of his parents, the academia connection, obviously the donations. I want to believe that he will get justice will be served, but I think with certain high profile cases in the recent years, I've been surprised at sort of like the leniency.
Mm-hmm.
What I feel like is just the egregiousness. It's so blatant that I don't know how you kind of like plea that down. Like I said, the SEC's I think they have like a suit against him. It's not their actual criminal filing, but it's it's unbelievably criminal.
Yeah.
There's not because he kind of does that whole thing of like, we didn't, I wish I had paid more attention. And the best part, if you go back to this, the interview he did with George Stephanopoulos, who, is a pro at interviewing at this point, he caught him up. He said, because Sam Bankman's very, I think probably his whole life he's been told how smart he is. And it's really interesting. It's kind of going back to the Warren and Charlie stuff where that can be really dangerous when you think you're too smart. And they said, well, you said on a podcast, Sam, you're really good at risk management, but obviously you're not. And Bankman, he like, you could see like him, like he's like that like, he's just really upset. He's like, I ain't smart. Like the evil almost got out of him. But he goes, well, no, I wasn't paying attention. I mean, if I paid attention to it, I just wasn't even looking. That's
sweet. So, you know what?
Yeah, like
you're right. His biggest defense right now is not I did anything wrong. It's just I'm a complete idiot.
That would be his best defense.
Yes. That's literally what, from day one when this started, I was like, oh my God, he's just saying he's a moron. And that's what he wants his defense to be.
But when you actually have to get him and have him acknowledge, like, yeah,
he won't.
Yeah.
God, you were wrong, you big dummy.
Yeah.
He gets like, well, no, I just didn't
Right.
care. It's like
He can't. He
talked about he had no involvement with Alameda. It's like, what do you mean no involvement? How are they getting these deposits from you?
100%.
Caroline wasn't. He was running the show.
And she turned on him so fast. And of course by the way, so in defense of him, I talked to my brother, went to law school. My sister-in-law's a lawyer. The government's goal is to always to make the thing seem as awful as possible to get you to plea down. So,
sure.
With that said, I'm not trying to, SBF is, he's basically acknowledged that everybody's acknowledged they've done things. Do I believe 100% everything the government's saying? No, of course. I just don't believe everything the government says. Like they'll literally make somebody who did nothing wrong make it seem like they do everything possible to make the story a lot worse than it is. So in this spectrum of SBF did nothing wrong and SBF is the worst human being in the world, it's probably closer to here than here. But in normal cases, it's probably more like this. But SBF is just, that's the only thing I'm saying in defense of him. But at the end of the day, him going out and talking, I just think to myself,
what a terrible idea.
It's funny, we started talking, I'm like, okay, part of me respects that, but then part of me goes, and then finally a lawyer came out and said, if I'm this guy's lawyer, I'd be like, shut the fuck up. Keep your mouth shut.
Didn't he go on with Andrew Ross Sorkin also on CNBC?
Did he?
I swear he did, yeah.
And they does this thing, and again, there's a lot of, I see kind of the nuance of what he's trying to do, and again, that we talked about him trying to be like, I just made a big goof, and he'll use like, I don't want to say it on the show, but he'll like be like, I effed up. Like he'll kind of catch you off guard because he'll just like curse.
Yep.
And it just kind of, but it almost downplays the severity of it. Like, yeah, I effed up.
Yeah.
Like, no, you didn't eff up, dude. This is like a huge fraud. But then they do this thing, and it was like with Elizabeth Holmes as well, where Bankman is the crypto whiz kid. He's a grown man.
Mm-hmm.
12 years ago, he was eligible to go serve his country.
Right.
So this narrative that like, he's the kid that made a boo-boo. And with Elizabeth Holmes, when she was going into her court dates, she'd always be holding hands with either her lawyers or her mother.
Right.
And at the time, she was 37 years old. But it's this our minds, it's kind of like a heuristic. We're like, oh, it's a girl that made a boo-boo versus an adult that committed
fraud.
A crime.
Blatant crime, yeah.
That had terrible effects on people's lives. And, that's where I feel like I have even more of a knee-jerk reaction because even that Substack post, him trying to write the narrative and, some people the media will report on it. They'll say, hit what he said. And then, people are going to it's going to be like a game of headlines. And, I'm pretty sure, and again, I see what you're saying, like nothing's ever totally black and white. But I think like there's stuff that's indisputable, just knowing that like this is people's savings and retirements and
yeah, but you know what? At the same time, this is going to sound very insensitive. This is why we created our channel. And when I hear people criticize us for being too conservative, and I hear people lose money like this, I go, okay, there is fraud there, but that's what happens in bubbles. There's way more fraud in bubbles. And if you stick to things you understand and know, they're less likely to happen. Like I said, look at Amazon. How many people out there would literally say today, I don't get it, therefore I'm not investing in it. And yet I'm saying that. I'm just like, listen, it's too complicated for me. I'm out. Who would say that? I look at that saying to myself, like, I'm capable of saying I don't get this. And I'm not trying to sit there and say, it's just like the mortgage. When people were taking these mortgages out and they were doing no docs, and don't tell me they weren't lying. They were 100% lying about their income and things like that. There's some personal accountability I want. I want people to look at it and say, I lost money. Yes, it was fraud, but what's my lesson learned here? Mm-hmm. That's what I really want people to get across.
And I see that point. I would say that you said something earlier about like the environment someone's in. I think, in kind of the conversations we have, like, of course, it's like I would have not put money to get whatever was 8% interest, or that just didn't make any sense to me. The part where I have, I'm not to say that you don't have empathy for it, but I'm more empathetic in this current moment towards these folks is I'm aware of maybe hyper aware of how manipulative the advertising and marketing efforts were.
You're 100% correct.
That's where you could even be someone who's pretty hip and you're like, Tom Brady's in on this, Steph Curry, it's like literally associated with everything that's mainstream as you could be. I mean, Bill Clinton's on stage with him, you got Giselle, the commercials running nonstop. We all know the other instances here, but I think that's where it's very difficult for anyone to, and again, that was most likely customers' deposits that was being used for that.
No, and by the way, Chris, you're 100% correct. That's why I'm sitting there saying I don't want to sound insensitive, but I also don't want to take away, like you said before, we have no repercussions for things. You didn't say exactly like that, but I was just talking the other day with somebody about how much I hate corporate welfare. I'm like, I hate it when companies get bailed out. And they're like, oh, and I'm like, yeah, I hate all sorts of bail. I listen, I just believe you just have to learn your lessons sometimes. And also, sometimes you're going to get wiped out completely. And what does that mean? Hopefully the lesson learned is next time I won't put more in than I can afford to lose. Because guess what? Every great investor always tells you that.
And I actually think that going back to what we said like an hour ago about the people that made money on Peloton and cashed out and did really well, this is the same thing. You lose all your money in Bitcoin. Let's say they make you whole. You're like, okay, I can go and do a risky thing again. Maybe I'm going to get my money back.
What are you saying about Peloton?
I said the worst case scenario is when people made a ton of money on Peloton, sold it, and they're like, I'm a great investor. I can go in.
Oh, yeah. No, and that's the thing. It's like making people whole is not good for that reason. But I do believe, when we're talking about the Bernie Madoff thing, I think they should be made whole because the government sat there and said, and they're there to protect their citizens, and they sat there and said, this is okay.
And these people that invested in crypto and still invest in crypto, they're going into an unregulated industry. You have to know the risk you're taking. Right. And if you don't know the risk, shame on you.
That's the thing. It's a healthy balance. Go ahead.
And that's I agree with so there's a part of me that's absolutely right. I believe in personal responsibility. At the end of the day, no one's going to save you from yourself. It's on you. The part where I think, knowing just how much I know I've learned in the last 5 years.
Yeah.
I'm still learning. And there's, and I'm not saying there's an obligation to do it, but things like FDIC insurance, that's not something, I'm not saying that people knew, they should have checked for FDIC insurance. I don't think they know that their bank even has that for their money.
You might be right.
Now, there's a lot of those nuances where, and going back to where I think that part about consequences, nothing against the team or anyone from the city. I have a funny story. I bumped into someone who was decked out, but this was, I really didn't like how the Astros cheated to win the World Series.
Oh,
same.
Or I didn't like how Will Smith smacked Chris Rock in the face and got to win his award. Nothing happened. Those two instances, very pop culture-y, but just where we're setting an example of you can do something that doesn't. I don't think anyone needs to be banned from Earth, or no one murdered anybody. People make mistakes where humans were flawed, but where it just gets no, it's fine. They're still the champion, or no, they're still the best actor. These are things I think they send a really bad message about. Just constantly.
No, you're right.
Things the right way, and with Bankman or whatever, with our vegan friend with his Toyota Corolla, he said, "Tell you, I don't really need a Lamborghini. I have so much money in Robinhood." It's just that punk needs to get he needs to do some hard time, and if he doesn't, I don't see how he gets to walk around without people throwing things at him, because I think he's just it's terrible, and I don't know what that's the one part I'm worried about when I almost said a lower number, is because there's been this precedence, and again, it's all availability bias, what I'm just seeing right now, where people don't they just kind of we'll make an exception for you.
So here's what we'll do. 20 years or below, I win. 30 years or above, you guys win. Anything between 20 and 30. 20 and 29.9999 is a draw. I just think that...
we have to go visit him. We go visit him in prison.
Oh my God. Imagine we got an interview. Imagine we got an interview with him.
That would be some
content. On the glass, put your hand up. we're here with Sam. He's like, hey guys, thanks so much for participating. And they're like, the guys are coming giving him their cigarettes. Like, hey, sorry, Sam, didn't mean to take these. He's like, yeah, don't forget again, buddy.
Well, this was a great interview, Chris. And, it's nice, when you started doing the Charlie Munger quotes, I just wanted to make sure you were actually a genuine, real investor. Go ahead. Go ahead, Mo.
Is there a chance that you interviewed Charlie Munger?
0.
So it's...
Have you reached out anything?
I've never reached out.
Okay.
I know someone who could get a letter delivered, and it's weird. It's like I don't want to have any expectations. He doesn't owe me anything. He's been, such a good influence on me. I don't want to have because I would be a little disappointed if I didn't hear back, and I recognize that. And I don't want to feel but I wouldn't expect him to get back to me. I don't, you know what I'm saying?
Yeah.
I don't feel like he owes me anything.
Yeah.
I'm happy that a lot of people discovered. I think my favorite thing about that page is periodically I'll do one of those Instagram polls. Did you know who Charlie Munger was before this page?
Yeah.
As time has gone on, it's an increasing percentage of people that are finding out about it through that page.
Great.
Kind of one of my hopes.
Yep.
And I think we might know this. I have another page that it's just meant to be a resource. It's Warren Buffett videos.
Oh, that's you?
Yes.
Oh, I didn't know that.
Either.
Yeah, I realized this came up recently. I realized because I'm the CMQ investing on the podcast and then now on YouTube, I realized I have to start bringing that to people's attention because it's I wasn't doing it to be the face of it, but yeah, I'm I have my hands in I guess more things that people realize that they're overlapping.
Yeah,
if that makes sense. So anyway, I guess it's very Charlie Munger come to think of it, being in the background.
Yep.
No, I appreciate you guys for reaching out. It was really great to connect, and I really like what you guys do. And as I said, I want to go deeper into the catalog because I know there's I got to find that. Guys, you get the wig for Sam Bankman.
Yeah,
I gotta see that.
Just send him an email with those videos.
Send me so I sent you a DM on Instagram. It's Real Mustafa Hussein. So just shoot me back your email and I'll get everything over to you.
Awesome, and we'll keep in touch for sure.
Oh, absolutely.
At some point, love to have you guys on my side.
For sure.
I'll send you. I make those parody songs.
Maybe we'll come to New York sometime.
Yeah, let's go to New York
and we'll meet up. So it's we think the next few years will be very, very rough and good for channels like ours to say, guys, this is the world. It doesn't change. It's just different characters every time. So I'm sure we'll stay in touch and we'll have a great time. And last year was a great start to that whole process. And, unfortunately, people have to lose money for us to really get to a better place. So, Chris, thanks very much for coming on. Thanks for responding to my message on Instagram. And good luck to you and your channel. And guys, everybody follow Charlie Munger Quotes on Instagram and YouTube, right?
Yeah, on YouTube it's CMQ Investing, and the CMQ stands for Compound Money Quietly. That's the YouTube channel, and it's also on Spotify and Apple. I've got over 120 episodes. Most of them are just me.
Okay.
They're shorter episodes. I've got a lot of legendary investors, kind of wisdom, looking through their eyes at current events, and then also some kind of outrageous comedy sprinkled on top to keep it entertaining. And then now on YouTube, that's obviously becoming more of a focus, but I plan to really lean into it this year, and I'm enjoying it a lot. And it's great to connect with like-minded people who are putting out good messages because there's so much garbage out here, as we all know. So I really appreciate you guys for reaching out, and definitely, CMQ Investing is all my content's kind of under that brand, and I'm looking forward to checking this interview out, and I'll share with everyone I know.
Thank you very much,
Awesome.
sir.
Thanks, Chris.
Have a great one.